How are you guys surviving? I need to know. I want to know. Check this out.
Is it just me, or are we in a global recession? I mean, this is not normal. It is 9:40 in the morning, Thursday, September 18th, and our shop is looking. Now, thank God I have a few inspections to do, so I'm going to stay busy today. I have like 14 government vehicles I have to do. But you can't tell me this isn't a government recession. Like, what the hell is going on here? I mean, as you can see, we're so busy. We have so many cars in here right now. 9:30 in the morning. We should be packed. We should at least have oil changes. We should have something. And before the people start commenting that, well, you know, shop charge too much money. Our shop doesn't. We actually charge a lot less than we should to make good margins and actually make money. So we actually undercharge a whole lot at this shop, and we still don't have business. We are probably the cheapest shop in our area compared to all the other shops. Our labor is only $135. Other shops are like $150, $160, $180. Dealerships are like $200. And we do decent work. We do good work on cars. We never have complaints. We never have people come back. We never have returns. This is how our shop looks. This has got to be the beginning of the middle of a recession, and probably the beginning of a depression. I've been here 6 months. I have not seen it this bad. And it's been like this for the last probably week and a half, 2 weeks. So what's gives? What's going on? Why is nobody coming in? If you guys are doing work on your own vehicles, respect. I respect that. I work on my own vehicle. You save a lot of money that way, but the people who can't afford to work on their own vehicles and have to bring it to a shop, they're not even here. I think we're cooked. Is it just me, or are we in a global recession? I mean,
I don't care what anyone says, we are 1,000,000% in a recession due to the fact that Facebook Marketplace has been popping off lately. Like, people are selling their treasures that they've had in their basement or their garage because they need money.
How's everybody surviving? I get paid bi-weekly, and we are a family of 4. We have 2 kids. How are y'all surviving? Because I'm not. I got paid today, and it's gone. Goes toward the mortgage, cell phone bill, gas and electric, garbage, everything gone. Between insurance, car insurance between my husband and I, everything gone. And then I have to go to the grocery store. This isn't even factoring in groceries for a family of fucking 4. So imagine how it's like every month. It's like, do we go do a big load haul of groceries, or do we pay our mortgage? Like I can't do both. And my husband works 50 hours a week. I work 40 hours a week. We can't do both. We can't do both. So like, how are you doing it? The people that don't have kids are barely surviving. I am not surviving. And I get paid bi-weekly. And people are like, oh, getting paid bi-weekly is so much better because then when you get paid more. No, it doesn't matter because all my bills get taken out at the same every month. I've tried to change it till the end of the month. It still doesn't matter. It doesn't matter when you have your bills taken out. Your money is gone. There's nothing you can do. You just have to ride on this floating rock and spend, $150 on 4 products at the grocery store. I can't. I literally cannot. I don't know how people do it. And unless you're a rich elite, so I hope everybody on this floating rock screams like I do, and we can all scream together, because I just don't collectively know how I can continue on with a recession. I've lived through one recession. I physically can't do it now. And you can call me dramatic. I don't really give a. I'm going to crash out. I cannot survive like this. I can't.
So there's a pretty good financial indicator out there called the used car market. And the used car market is a good financial indicator of how your country is doing, because it means that people have liquid capital. If you have liquid capital, you can buy a used car cash, because most used car sales are going to be cash purchases. So if used cars are selling well, probably doing pretty good. People have liquid capital. They're able to buy whatever they want. They don't feel stressed about the future. They're buying and selling things at leisure. If the used car market is bad, then people do not have liquid capital. They do not feel secure about the future, and they're hoarding whatever liquid capital that they do have. And right now,
all right, guys, sounds pretty bad. But you know what? There's always the stock market. So, you know, let's get going here. Here goes nothing. There is one stock about to skyrocket. It is very related to people lining up to buy gold. There have been reports, pictures, videos of people lining up to what it looks like is buy gold. Question is, are they selling their gold? Has anyone asked this question? And you know what? In terms of amount of gold bought and sold, how much is bought and sold by lining up to do so versus opening up your phone or your computer, right? There might be more humans lining up to buy and sell gold physically in a line, but maybe not quantity of gold bought and sold. So with all that said, my mission is to help you buy stocks before they go up, and in helping to fulfill that mission, this is a stock that I think is about to go up. The ticker is DUST. It is an inverse gold ETF. Let's talk about what that means. And this is not financial advice, but hopefully it helps. Let's get started.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here's DUST. It's a leveraged inverse ETF. About 2 times the daily performance of basically the opposite of gold. So it goes up when gold goes down. Okay. And there's a little bit of fees and expenses, but you don't really have to worry about that. Okay. Now, what am I saying? I'm basically saying gold's going to go down, right? Do I know it's going to go down? No. Okay. Am I saying go buy or sell futures, short futures? No. Okay. That is what I'm saying. It's just that this is a stocks channel, so I'm not going to talk about futures, except to say, look at this thing. This is gold futures. Okay, if we just look at like whatever this is called, E-mini S&P futures, this is just the actual market, right? So at 6 p.m. today, this thing will start moving again, just like it did. Today's the 19th, so last Sunday would have been the 12th, right? 7 days before. So if we go back to the 12th, see we got that gap up. This is like the story of the week, right? The story of maybe the month, is this thing was chugging up. This is the market, right? It looks like this, looks like the NASDAQ. It looks like the small cap market, the Russell RTY. It looks like the small cap index IWM. It looks like SPX, which is 10 times SPY. It is the market, right? It went up. There was Liberation Day. We're going to free ourselves from China. We're going to put tariffs on these guys. And yeah, that killed the market. And, you know, we got our voice back and boom, Trump said no tariffs. Everyone's happy. We went above all-time highs. Now we're up here. We had some pullbacks, but this was 2 days, right? Whereas up here, this is a single day. Okay, so this was a pretty terrifying day, pretty massive volume, biggest volume since early August, which was this capitulation day. So, you know, capitulation, right? When people give up on selling and start buying again. You know, in the scheme of things, yeah, it gave back a month, but chugged right back up in a couple weeks. So here, did we give back a month? Yeah, but then we chugged up pretty quickly in the next, well, less than 2 weeks this time. but it's still choppy. So we're still within this day. It's going to be hard to get out of this day because it's so big. So that's all stuff that if you opened up your phone, your portfolio, your positions, you've noticed things didn't go so hot in the first couple weeks of this month. And that's all leading up to say, what are we going to do at 6 p.m. today? Well, maybe you see this video after, maybe you don't care, you don't want to look at your stuff on Sunday, which I get, that's cool. The whole point of this channel and this sort of style of investing is you don't have to look at you can be a busy person. You can check your portfolio once a week. Twice a week would really be better, and every couple days or less would be, you might perform even better than that, but really you can be a busy person, okay? This is not a day trading strategy. So if breaking news comes out and you're at work, you're in your business, you're with your kids, you're with your friends, you're by yourself, going on a hike, going sailing, doing whatever you are doing, it doesn't matter, right? Because in almost all cases, yes, this hurts, but if you zoom back out a couple weeks, we're pretty equivalent to where we were a month ago, right? This isn't a breaking news type strategy that we're talking about. So what strategy am I talking about? Well, here's gold, okay? Over the past, whatever this is, 3 months, from late August, September, all right, 2 months, this thing has gone up 30%. That's pretty massive for gold, okay? It had another period of a few months where it went up 30%, okay, built out a base, and then went up 30% again. So, what does that tell us? In the last 5 years, gold is up, but is it really just going to keep going up forever, or are we going to have a little pullback? We're probably going to have a pullback, right? Probably. And we could get all macro speculative here, where I speculate on, God knows, I can't even pretend to understand what's happening here, where the bond prices are going to go down, and then the stock prices are going to go up, money flows into the market, and the dollar is going to go wherever it's going to go. The worst case scenario, right, is dollar goes down. Okay, that did happen in April. I don't know why I'm looking at 5 years again, but it's fine for these purposes. Dollar went down in mid-April, in February to mid-April, Liberation Day to then the capitulation, where everyone's freaking out in mid-April, where it's like all these e-com businesses are going out of business. Everyone who was in retail is going out of business. They were already going out of business. Now they're really going out of business. And then it's like Bess and Trump are like, it's going to be all right. Just that whole tariff thing I said, yeah, just forget about that. We're going to ixnay that. So, Wall Street's happy again. The market goes up. But at some point, this dollar is going to go down. The stock market's going to go down. And the bonds are going to go down as well, okay? And when that happens, we're pretty much cooked. But, or gold's going to go up, okay? So that's sort of the uncertainty around this whole gold play. But until that happens, right now, it looks like gold is extended. And we can look at some gold tickers. KGC is the main one. I mean, if we were just looking at this as a stock, and I can look at a daily chart, basically 24 hours is what I like to look at, because it includes the overnight wicks, which, are pretty scary. If you look at your phone and you're like, suddenly, in this case, the wicks go up, so you're up a lot. But if you look at a daily candle, maybe I've mentioned this, maybe I haven't mentioned it on something you've watched, you can see those wicks are not there, right? So what can happen is, there's a bunch of gaps in this chart here, gapped up. But you know what? Sometimes it doesn't always gap up. It also gaps down. So I like to just have all the candles connected, seeing as trading is 24 hours in a lot of these. Well, it's certainly 24 hours in futures, but also in a lot of these stocks now, like Tesla, etc. So that's why I do that. But to bring this to a head here, if you look at these stocks, this thing does not look like something that's going to keep going up forever. I mean, this is a breakout. This is up a lot. I actually have this relative strength to the SPY line. This is that blue line. There's a lot going on down here. I promise I don't even use this thing half the time, going this whole thing down here. But if you just sort of just look at this blue line, it's super strong. And that just says that this gold is way stronger than the market. And we can sort of check on NVIDIA. NVIDIA's up above the market. You know, NVIDIA is a big outperformer. Just boom, 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 boom up above. If we look at like, geez, who are we going to pick on here? IBM, right? Sort of underperformed the market for a while last year, and then kind of did okay, and then, you know, just way underperformed here. So this blue line is sort of just an indicator of that. You can see the market in the green overlay in the background as well. That's another way to look at it. But all that to say, if we look at these gold stocks, they're way overperforming the market. So, you know, I don't know that you, gosh, I'm sort of scratching my head. I don't want to give you the wrong gold stocks. AU, NEM, GOLD, and KGC. Okay, those are some key gold miners. Okay, so NEM, AU, GOLD, which I don't know what's going on with that one, but Thinkorswim can be a little buggy on the weekends, and also you don't need to exactly invest in the perfect one. DUST is the one that I think is the best way to play this gold move, which is to say I think gold's going to go down at some point, and I think this thing, which is the opposite of gold, right? It went down a lot, is going to go up, and you see the volume coming into this is massive. Big did have a big day on Friday, so you could buy this, you could risk this low, or even this low if you're even more careful, and then see if you can get a move up to 13, 14, or up, which will be, you're going to see a pullback equivalent in gold futures of a move down to maybe at least like 40, 30 or something like that, right? Something like here seems totally reasonable to sort of just level out here, which is pretty significant. I can't actually draw on here, but we can use our heads here and say if you go from 4,400 basically to 40 to 4,000, 43 to 40, that's 3 out of 40 pretty much. So that's like 7% move down a little bit. That's a pretty significant move. So that would be accompanied by a 7% move up. Well, actually, this is double leverage, so it'd be 14%, which would be up to like 14. That's not true at all. Actually, 14% on 10 would only be up to like here. Okay, somewhere in here. But that's pretty significant still. Okay, somewhere up here. So especially when it moves 8%, but this day on Friday was pretty massive. Okay, it was above 8%. So you can risk a day. You can sell half when you're up like, I don't know, maybe a little less than 10%. Sell half when you're up maybe around that 14, 15%. So that's the idea. That's the way to play it. If you like these ideas, hit that like button. If you like to get notified when these ideas come out, hit that subscribe. And if you want to share your ideas, get feedback on your portfolio, your stock ideas, talk about it, ask me questions, head over to stockscommunity.com. You can use code Q4, that is the letter Q, the number 4, to get 20% off. So if you think that's worth it, try it out for 7 days for less than 25 bucks. Give that a shot, and I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's check back in with the and the world over here.
Used car market is tanked. It's tanked. No one is buying or selling anything, especially the cash purchases. So, not a very good indicator for us as a country or our economy. Either people have no money to spend or they are incredibly insecure about their future. And either way is not good. So we're going to see how this plays out in the coming months. But I don't see that trend ending anytime soon.
What's going to happen when people don't have enough money to live? I mean, like literally to afford the basic necessities like food, water, gas in the car. The minimum wage hasn't been raised in 20 years and the prices of everything are going up exponentially. Housing especially. They're trying to criminalize homelessness right now because pretty soon it's going to be a common crime.
I am sitting in my car and I'm just basically trying to plan out my next moves because I can't stay here. I have to be out of the place that I'm in currently in 2 days. And I don't know what I'm going to do next. I have been trying as hard as I can to try to find out what the next steps are going to be. But to be perfectly honest, I got nothing. I'm starting to lose hope. I'm starting to lose faith. It's starting to feel like I don't know what to do. I'm like, I can't stop crying. I can't stop panicking. My panic attacks won't start. And now they're starting in my sleep again because this is a hopeless situation. And as positive as I want to be about this, the world is burning and I don't have no degree. I don't really have any good job experience. The job experience I have hasn't gotten anything. I've been putting in applications. Nothing is being done. I don't know what I'm supposed to do. I am legitly scared. Like scared out of my wits because I'm gonna be.
Okay, this is really bumming me out. I think we just gotta jump into another video breakdown here before I get really depressed on this whole market crash propaganda here. All right, so. Here we go. GLL. Just checking on the old streaming software there for a second. All right, seems to be all copacetic here. There is one stock that is about to break out. It is a gold related stock. So Barron's, I'm not just here to pick on Barron's. There's been a lot of publications talking about how now is the time to go get in gold, buy gold, have an allocation to gold, diversify into gold. The time to buy gold was not, last week or the week before. It was like several months ago. So there's stories about people lining up to buy gold. Are they lining up to buy it? Are they lining up to sell it? I think if you're not taking a look at stocks that are, that do well when gold goes down, I think you're doing yourself a disservice. So this ticker is GLL. It's about as pure play, opposite gold stock as you can get, which is to say it actually goes up literally when gold goes down. So let's look at the stock. Let's talk a little about gold. Let's talk about stock prices going up when bond prices go down and when that doesn't always, happen, like when the whole Liberation Day Trump tariffs happened. And let's help you find the next stock so you can buy it before it goes up. That is my mission. It's not financial advice, but give it my best shot.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So look, here's the ticker. I'll give you the ticker right now. Traditionally, you would look at a stock like this, a ticker like this, and you would be like, this has to be some kind of joke, right? I mean, you're going to buy this. And you know what? The reason this thing is going down is because, not because it's a bad company. Now I'm on a 5-year chart. I was also going to look for a 20-year chart. It's not really like that. Like if we were to find a company that just sort of, trying to pick on a company here. Here's Peloton as an example, right? If we just cross out the part where, we printed all the money and everyone had stimmy checks and stuff and just go to the part where it cratered, right? That's not a company that looks super strong, right? And so GLL, well, the reason I'm talking about this as a buy idea is because of, well, not just because of what already happened. I'm kind of a little late to the punch already, but if you get too early, you might, jump in here and then get chopped out. This thing goes up when gold goes down, okay? This is gold futures, and big pullback on Friday. The thought is that these are going to go down. And so a way to think that that's going to happen is to put money into GLL, okay? So what's going on here? If we knew exactly when gold would go up based on when the stock market went up, we would be very wealthy, okay? But that's not always clear. If we look at gold over the last year, basically went up the entire time, with the exception of when we got the rebound in the stock market. You could say what was happening here was money was flowing out of gold and into the market because Trump was saying it's all good, tariffs are not going to happen, it's all fine. And then when we got to these overheated levels, which seemed overheated at the time, money flowed into gold after we'd gone sideways this whole time. We had a breakout, but the market still went up, okay? So now we don't know, no one knows what's going to happen, okay? All we try to do with these ideas is say, hey, 60% of the time, I think this is what's going to happen. And if you do that enough, eventually you start to really outpace someone who's only right, half the time, which is someone who just doesn't know anything about anything, right? So there was a little uncertainty on Friday with the market pulling back. There's some chop. Maybe we go sideways for a couple weeks or months, really. And so if that's the case, what's going to happen to everything else? Is gold going to unwind? It's hard for gold to be the safe haven because it just went up 30% plus in a few months. Now, does everything always behave? Not really at all. This is the 10-year. This is the 10-year bond price. So there's less demand for these bonds as the stock market has gone up. That's generally what we expect to be the case. Money flows out of bonds and into stocks. Now, when Trump did the whole tariff thing, we got a little scared because the stocks went down and the bonds went down. So other countries didn't want to buy our bonds. That was scary, okay? And that could happen again. That's basically the Ray Dalio 10-year cycles, 10 years where the stock market goes sideways, the end of an era where the next Roman Empire, the next empire to fall, propaganda, life's mission to get that message out there, whatever you want to call his message, that's basically what's going to happen. He's saying is at some point bonds are going to go down, meaning the other countries don't want to buy our bonds. They don't think we're worth the money. They don't think we're going to be able to pay them back, or that our money's not going to be worth anything. So the dollar is also going to be not worth anything is another way to say that. And then the stock market is also going to go down. So that's like worst case scenario. But right now, stock market just keeps going up. Our current administration basically voted for more money. Republicans were like, yeah, we're the, lower the debt party, but you know what? Not actually. So they were like, let's just vote a big, beautiful bill and just keep the money flowing. And I don't really care, like, as to ally myself with one side or the other. I'm just saying that's what happened, and stocks went up. Okay, money keeps going up. Money keeps going up. The data center names keep going up, particularly Iron is a data center name. Mara, Riot became data center names, switching from Bitcoin mining. All these hyperscaler compute names, as well as the quantum names, RGTI, RIONQ, QBTS, all of these speculation names, Archer Aviation, Joby, Electric Vertical Takeoff, Rare Earth names, CRML most recently, USAR, MP Materials, and then some semiconductor names that support the data centers, NVTS, and then the semi names themselves, CRDO, AVGO to a lesser extent, and then the big dogs, NVIDIA, AMD, ALAB, somewhat, LRCX, somewhat, AMAT, 2. Money flew into these companies as the stock market went up. The stock market went up as money flew into these companies. Say it however you want to say it. Without data centers, our GDP in the first half of 2025 was apparently 0.2%. So the economy is AI. AI is the economy. We can hate on it. We can say there's not going to be enough breakthroughs to actually keep using it. Everyone's using ChatGPT, maybe throwing them $20 a month just to not get left behind. Accenture, a consulting company, all these big consulting companies of humans that are not the McKinseys and Bains of the world are spending a bunch on AI. Oracle is the beneficiary, and they have to spend money on AI because they're going to get wiped out otherwise. So no one really is actually using AI to a crazy extent besides, some of the unicorn companies that are going to, quote unquote, achieve super intelligence, or AGI. That's the Perplexities, the Anthropics, the OpenAIs of the world. Meanwhile, the legacy software companies like Duolingo are going to get crushed. You see this thing coming down. Maybe the Coursera's, the online course e-learn companies, aren't going to do well because AI is just going to eat them alive. Eventually, ServiceNow, Salesforce are going to get consumed by OpenAI, ChatGPT, etc. Unless they invest a bunch in AI as well. So AI is like the economy right now. And so as long as that's not a bubble, we're not in a bubble. This isn't 2000. This isn't 1999. This isn't the calm before the storm. Why does all of that last 5 minutes I've spent talking about that matter? Because if all that comes to pass and the Ray Dalio thing happens, yes, people are going to buy gold, probably, right? Or they're going to buy Bitcoin. The young people are going to buy Bitcoin or Ethereum, right? But the boomers who have most of the money still, it hasn't really trickled down yet to the heirs, are going to buy gold. And so if that happens, that's going to happen. But right now, I don't think that's going to happen, all right? Because right now we have a situation where gold went parabolic and the thing has to cool off at some point. everyone's saying to buy gold right now, and we're not there right now. OpenAI is still the darling. ChatGPT is still thought of to be the company, the next $1 trillion company, even though they have like 10 billion of revenue or something like that, and they're losing money. Because every time someone at a company opens up ChatGPT, they have 10 to 100 times the amount of queries they can ask it that aren't being serviced. So, or they have an API, agent or whatever that is going to be their new Zapier and make all the connections and do all their automated workflows for them. So they don't have to pay some middle level or junior person to set up Salesforce or do it. ChatGPT is going to do it for them. As long as that's still the belief that that is the growth story, people aren't going to rush into gold. So this thing's going to come down. So that was a massive preamble just to say that I think this thing could come down maybe 10, 20%, whatever it is, down to here, 15%. So a way to buy that move down is to buy a GLL. And you can see a lot of volume coming in here. That's people already doing what I'm saying. So the amount of volume on gold futures themselves is not huge. Like there's definitely more volume, maybe as much as double a month ago. But it's not crazy compared to some of these inverse ETFs, which is what GLL is. So this thing, people are buying this thing. People think gold is going to turn. And that's the idea I'm giving you today. So GLL is the idea, and you can risk this top. That's the idea. Maybe it will go a little higher. You'll have to risk another one, or you'll get chopped out. You have to try again. But give yourself a couple tries, not more than that. If gold just steamrolls on, hey, I'm wrong just like everyone else a lot of the time. But if not, you buy this, you risk a little bit, and this thing could go up whatever percent, 10, 15%, super relatively smoothly, just because it's gone down for so long. In other words, gold has gone up for so long, and it's probably going to have a little retracement here. So that's the idea. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to see the best idea as soon as I have it, and not get overwhelmed with all these different ideas I throw at you, and some of these ideas are delayed because I have to put up the videos out late because YouTube gets overwhelmed if I put everything out at the same time, head over to stockscommunity.com. You can ask me questions too there. I'm not as active in the YouTube comments because, as you can imagine, the comments are all over the map in terms of like utility to me and to the person asking the question. I think use code Q4, you get 20% off. You try it out for $25 or less with that code, really, and you get 7 days to try it out. So I'm always available in that group. Hope this helps.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Okay, let's jump into a little more doom and gloom here. Hopefully the storm passes here.
Sleeping in my car, living in my car, and I don't even know where that's going to be because eventually it's just not going to work anymore. What do I do? What am I supposed to do?
We're going to see a massive increase in multi-family homes where kids are moving back home or older parents are moving in with their kids. It's going to be rampant over the next 3.5 years with the way this economy is going to get destroyed, the way the housing market is going to get destroyed, the way that medical bills are going to cripple people in financial bankruptcy, the way student loans and education is going to be unobtainable to pay for people. I mean, it's already been happening over the last several years. It's going to rapidly increase. And my wife and I are fully prepared for that to happen to our kids as they are going out and trying to even find work, any kind of work in this country. is nearly impossible for young people because most of these places are hiring older people who also need to work now because they can't retire. They can't live on their Social Security. They can't live on their pensions. And they would much prefer to hire an old person who they believe will be more, stable or predictable or whatever. It's a nightmare. We are supposed to live and die and work and be productive, and that's it. That's all the power structures in this country want.
I'm trying to enjoy my last days within this unit that I've been renting for so long. Really sad that I have to leave because they decided to raise my rent $700, and I already pay $2,300 without parking fees, which is $185, and plus utilities. So I'm paying $2,600 a month, and they still decided to raise my rent for another $700. So they want me to pay now $3,000 base rent. Are you kidding me?
I believe in full transparency. I'm not gonna sugarcoat or lie about anything. I'm gonna be completely real on this page. I'm struggling, bruh. I've been looking for a 2-bedroom apartment. I have a baby. We need that second room. And nothing goes for less than $2,500 a month. How are some of you guys doing it? How? With car insurance, car payments, rent, gas, and a few other things, how are you guys making it through? I'm barely just making it by, and I have a pretty decent job. I got paid pretty well to hold the family. But $2,500 a month? Like, are these people like going crazy? And like now I'm looking at like actual like not apartment buildings or like luxury apartments. I'm looking for people who own duplexes and have like multi-family homes. They're charging the same thing. And the apartment's like beat up. Like, what's wrong with people? Like,
okay, let's get into a little more optimism here. See what companies look like their stock prices are going to go up. This LITE is interesting. LITE. Let's see what they got going on here for recent news. I'm not seeing anything too crazy here. Q1 guidance. That was in August. Q1 guidance? That doesn't make any sense. That should have been Q2 earnings. I have no idea. Talk recent earnings for LIT. Let's try that. Okay, here we go. If you have any comments, questions, you can hop those in the chat. I can see those on YouTube, preferably. And let's get cooking here. Here we go. LITE. Optoelectronic, photoelectronic companies. Okay. Notably, they have some sort of connection to NVIDIA. collaborating on optical interconnects. Interconnects. Okay. All right, let's get cooking here, folks. There's one stock that is about to explode in price to the upside. It does have a collaboration with NVIDIA. NVIDIA, of course, the $4 trillion juggernaut of the market, pulling back a little bit. NVIDIA, that is. And the market's still strong. I know AMD is a big part of that. Huge move up with the OpenAI collaboration. The market is AI and data centers right now. First half of 2025, GDP was 0.2% when you take out data center contribution. So basically, data centers are the economy right now. If that's depressing, well, get out of the US. I mean, that's what we're up to, I guess. We're just going to machine learn AI our way to prosperity. And there's one stock that is going to go up in the near future, I think. That ticker is LITE, Lumentum. They do have that collaboration with NVIDIA. They do optoelectronics, so basically they help. I couldn't tell you exactly what optoelectronics are. But there has to be a bunch of networking and cables and chips in order to make all these data centers develop successfully. It's not financial advice. I'm not a deep sciences chip expert. I do have a background in that area, but I try to stay as dumb and removed from that as possible so that I can just look at the charts and see them go up. It's not financial advice, but LITE looks good to me right now. Let's get going.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is the chart, right? LITE, big move after earnings. Apparently they had some raised guidance somewhere in here, which is great. You know, higher earnings with higher sales. Maybe earnings are like half of sales or whatever, you know. Earnings is like EBITDA, like earnings before, blah, 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 blah. If those are good, sales are good, and guidance is good, meaning they're going to, you know, keep having good earnings and sales, then the price goes up because everything's hunky-dory. But it's been basing for a while, so things don't go forever. Sometimes they go sideways before they go up. And I never really think it's a good idea to buy things. Even if it was up like here in August, I wouldn't have thought that was a good idea. And actually, if you did buy in here and you checked your phone, you would have been pretty worried when you were down over 10% on this one day where it wicked way down. So, yeah, that's why I just wait until it goes sideways for a while. So it looks like you can risk off a level somewhere in here. You know, obviously the market's been choppy as heck. But of the stocks that are choppy, which they're all pretty choppy, this one looks less choppy. And you can kind of see that on the day the market went down a bunch. This blue line means the relative strength to the market. So like you want stocks that are strong when the market goes down, because that means people are buying them even when everyone is running for the door, running for the exits on the other companies or on their portfolio as a whole. They're not selling these relatively strong stocks. So that is the idea here for why Lumen is interesting. That's sort of the level somewhere in here, risk a few handful of bucks. Not a lot, you know, literally a few bucks. And then try to make 10, 20 and above. Earnings are in a couple weeks. Now, let's check. It's not Lumen, by the way. It's Lumentum. I'm saying Lumen, but I got to be careful because Lumen is actually another ticker that was also recently interesting, but not at this exact moment. So, LITE. Now, let's jump into what's going on, right? Everyone knows that data centers are the market. So why this company? Well, JP Morgan raised their price target for them. You know, price targets are kind of a crapshoot and they're made up, and you know, their whole purpose is to basically, my investment banks are doing their job by saying, hey, go buy these companies that in some cases are paying the investment banks. I don't know exactly how it works. I have not worked at JP Morgan, but I'm pretty sure the info I'm giving you is more helpful than some random price target. Also, PE ratios. We're not really too focused on stuff like that, especially in a market where Palantir and NVIDIA are trading at such massive PE ratios. You can fact check me on that, but I'm pretty sure that's the case. NVIDIA maybe less so than Palantir, but that's because people can expect NVIDIA's revenue to grow, expand, whatever it's called, as all these data center contracts that are backlogged right now continue to develop and actually get fulfilled. Here's the company: Lumentum, LITE, optical components, photonics, semiconductor equipment. You know, like I was saying, I'll just classify that as networking. I mean, this isn't like LiDAR that you put in like cars, autonomous vehicles, not Tesla's autonomous vehicles. They don't like LiDAR, but they use deep learning, you know, basically absorb a bunch of data and then just make decisions in real time. They don't want sensors that are like pre-programmed to do a specific thing every time. They want like massive intelligent computing. But for a lot of networking and just building out rote tasks, you need these optical sensors. And there are some similar ones. COHR, I've definitely been sort of kept that one on my awareness as well. And then VIAV looks better than COHR, but not something I would want to buy right now. It's kind of over this high, but kind of want things to base. This is in a weird spot, and it's also doesn't barely move, 3% a day, and it has barely any volume. So, you know, this is pretty gnarly, obviously, and kind of choppy. Not a ton of volume here at all. So, LITE, yeah, it's less volume, but the price is so big that in terms of actually money in this is a lot more money than the other ones. Pretty sure of that, right? Well, actually, COHR is kind of similar, but the chart on LITE looks way better. So this is what I look at first. I look at the chart, and then I sort of check what the peers are up to make sure this is the strongest chart. Would it be great if all the peers were about to break out? You know, for example, if you looked at like gold back, you know, this is earnings, but somewhere in maybe mid-August, whenever this thing went, yeah, mid-August, all of these stocks looks like, hey, they could break out. Sometimes it's not quite as clear as that. You know, it can be pretty clear in the quantums, sort of beginning of September in this case. They all sort of broke out at the same time. When that's not the story, there can be just a ticker that's sort of setting up. You do want to be careful with these earnings. You don't want to wait to buy this if you're going to buy it, because you don't want to be holding through earnings. So I'm not trying to give you a bunch of homework and saying now you have to buy this thing. You don't have to buy anything I tell you, but if you're viewing this as, hey, I'll buy this thing and I'll just hold it, you know, for a month, that's not really the idea. The idea is maybe you get a boost on this, you sell some out, and then maybe you get another boost or a pullback. Maybe you sell your whole thing, earnings happens, and then you maybe reevaluate if it's the best place to put your money. So this is kind of for someone who's interested in like buying and selling stocks more than at least a dozen times a year. I mean, at a minimum, right? If you just want to buy NVIDIA for the whole year, fine. Maybe you do luck out and you buy it at the right time when the whole market's going down and you make your 100% in a year. And you laugh at everyone who, you know, just holds the market and only made 30% or whatever on what is a great period of the market, which is that rebound. But in general, what can happen is you buy the wrong stock down here. And, you know, it was hard to buy the wrong stock because most companies went down, even like, you know, Caterpillar, which seems like a boomer stock, went up 70%. But I'm going to have to really dig into my brain here. But I do know that not all stocks just, you know, went up like crazy after the market dropped. So here's an example. Ford, it only really much went up 15% or so during this period when the market outperformed significantly. So if you're going to buy an individual stock and hold for the whole year, I think you're crazy, but you do you. So that's why this is an idea for the next couple weeks, and then to reevaluate after that. LITE. Now, let's talk a little bit about this company just so we can sort of cross our T's, dot our I's here. It is in this sort of category of semiconductor equipment, AMAT and MCHP. Also in the conversation, neither of them look quite as, AMAT kind of already started to broke out. MCHP looks like trash. Yes, it's basing, but after coming down, it's basing. So don't like that. Don't like that at all. It's nothing like this kind of base where it goes up and then goes sideways and even sort of tilts up. So LITE is the idea. Don't really need to jump into too many conversations, commentary about its partnerships, but they have joined NVIDIA's AI photonics ecosystem. They're collaborating on these interconnects crucial for AI data centers. So that's a huge vote of confidence, that collaboration. NVIDIA chose them, and they did acquire this company for almost $1 billion. So they're definitely a big player. We could sort of already see that from their revenue on sales. I don't want to jump too much into convertible notes, although it would probably be prudent to. And this just sounds like some sort of moonshot situation. So we don't really need to worry too much about the specifics of this company. I wouldn't suggest or expect you'd put anything more than 5-10% of your company, of your portfolio in a company like this. This is the play. AI data centers and long haul optical solutions. I don't really know what long haul means, but maybe that just means interconnections that span the US, sort of like fiber optics. I have fiber optic internet. This is how they're able to make some of those billion-dollar acquisitions. I'm sure the convertible notes and the debt helps or whatever. But yeah, revenue is good too. So with all that said, yeah, they have net income that's positive, and they have a product that is right at the center of this massive boom. 60+% year-over-year increase in the cloud and networking segment. So pray to Sam Altman, pray to Paul Graham, his birther, and just hope that AI continues to be the growth driver that it has been. This is the company right now. There's a lot of companies I could mention, but I do think one that hasn't basically exploded up in the near past is LITE. Can't say NVIDIA is a good buy right now because it sort of gave some back. Can't say some of these little stocks like NVTS, they've already gone crazy. This is in that semiconductor sort of conversation with AMAT as well. Have to sort of give credit to a stock that has gone sideways after a big move up for a longer period of time than the market has, which is just recently. So that's the move. That's the idea. It's not the easiest time to come up with stock ideas right now. I'm just being honest with you, but LITE definitely fits the bill. And if you're someone who's long only, which a lot of big funds with hundreds of millions of dollars and more, I'm sure anyone with a big fund is laughing right now, calling someone with $100 million a big fund, but they are always long, a lot of them. So they have to put their money in something. So they're taking their money out of other companies, putting them in other, I think some of them can buy inverse ETFs, like the gold ETF that I've mentioned. But if you need to buy only companies, that's your mandate. That was the reason people were able to buy MicroStrategy as a way to get exposure to Bitcoin without actually buying Bitcoin because they weren't allowed to. And that caused this massive run up in MicroStrategy. I I still think it's reasonable to be someone who just always buys stocks, even when the market looks really uncertain. So LITE is the idea. If you like this video, you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to talk about your portfolio and you want basically a weekly Q&A on how I find these stock ideas, head over to stockscommunity.com, use code Q4, that's the letter Q, the number 4, for 20% off your $25 entry fee. So I don't make it free to try it out for 7 days because I don't want bots in there. I don't want people just popping in and then, you know, when you don't pay anything, you're kind of like, maybe you don't pay attention, or more often you just treat it like a hangout spot. It's not a party. It's not a day trading room. If you want to see the best idea of the day, head over there, read some of those testimonials, and maybe give it a shot. And I'll see you in there or in the next video. Hope this helps.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump back into some sort of macro.
It's not like your mortgage went up because you guys have been paying it off since you bought it like 40 years ago. You guys are just being greedy. Oh, I'm doing it just because everybody else is doing it. You're gonna have to kick people out because they can't pay you. Don't make sense to me.
New Jersey is such a scam, and it is pushing people out of their homes, and it is so irritating. Not only are the home prices skyrocketing, taxes are unbearable, but now they whack you with these incredible, unrealistic electric bill costs, and we're going to talk about it. I just got our electric bill from Atlantic City Electric. That is who is our electric company, and it was $985. That's not the best part. The best part is we moved out of our house August 4th. So we didn't even live there. We still own the home, but we've moved out because we're anticipating a closing. So we don't even live in that house. The air has been on set to 80. There's nothing plugged in. There's no Comcast. There is no Wi-Fi. There is literally nothing plugged in, but our bill still says $985. If there's anything that is wrong with this picture, it is that it is pushing people out of their homes, not just for the tax reasons. That's also another topic, but I'm talking about electric bills, people's everyday need, okay? There's not one person who can do without electric. So I don't understand how they can just increase the rates. Also, we were we've had like that smart home, that like auto meter placed in our house. We had that placed, I want to say it was like 8 months ago. We called them, we said, take it off. We want someone to physically be here because it is bull. I don't believe it. They did that. Great. I paid the $15 charge that they wanted for it. Oh, that's not even the best part. We have solar. So our whole roof has solar all over it. It is a big home. So we had the solar, whatever. And so not only were we paying the solar a month, we're paying $985 for electric bill in a house we don't even live in. Are you kidding me? Are you kidding me? I'm dropping the actual charges below. They wanted like $177 for a delivery charge, and then they wanted like $140 for another charge, and then there's like another thing for another charge on top of the $519 balance that when we don't even live there. I literally, and I feel absolutely terrible for the people who literally live paycheck to paycheck and can't control it. Like, you have to have your air conditioning on. What do they expect people to do in this situation? New Jersey is pushing people out of their homes, and it is absolutely devastating. Something has to be done. I'm tired of sitting back and watching. Gas is up, electric is up, gas for the cars is up. Like, everything in the whole entire country is hiking up, especially in New Jersey. If you're not familiar, houses in our area, the taxes are like, well, where I lived, the taxes are like $15,000 to $18,000 a month, depending on which lot you have. So not only are taxes outrageous, now we're faced with electric. Please explain to me these charges. If you work for Atlantic City Electric, explain those charges. What is this shipping charge? You're not doing anything. Like, I'm so mind blown when I saw that bill.
Hi everyone. I thought I'd share another non-traditional economic indicator that is sounding an alarm, and it's absolutely heart-wrenching. And this economic indicator is a surge in pet owner surrenders. Shelters across the U.S. are reporting a surge in surrenders with financial hardship as the primary driver. The financial hardships are happening as there are job losses, as the everyday cost of living has gone up, and also the cost of caring for a pet have increased. The cost of pet food and treats, beds and toys are all affected by tariffs. So institutions like the Animal Care Center of New York has suspended all intake because of capacity issues. The Charlotte-Mecklenburg Animal Care and Control in North Carolina.
Okay. I love the animals as well. And maybe a good way to help is by, you know, helping yourself first. Finding some stocks that are going to go up. And then bringing it home from there. So this is an interesting company, STRL. They build out data centers. So what do you know? Another data center related company. But they're also connected to Rivian. So yeah, I think that's RIVN. Not that it necessarily matters. Because, yeah. We're not really betting on Rivian. We're betting on this thing. Holy McMoly. 200+%. Pretty crazy. Pretty crazy. All right. Excuse me. Got some net income. That's good. See, this backlog always sort of, you know, never exactly know what that means. Kind of a little company, but who are they building data centers for? Any big companies like Meta, etc.? That's what we want to know. And yeah. Let's see. Let's see. I don't know. I don't know. This is literally a demonstration of why we need data centers. This ChatGPT is being slow. Oh yeah, for multiple Meta data centers. And Walmart and Amazon. Okay, here we go. That's the company. So we'll just start at the bottom actually on this one. Okay, some nice pictures. I can see comments on YouTube. They haven't been particularly constructive yet, but holding out hope. All right, let's jump into a little breakdown here. There is one stock that is about to jump up in price. It is another data center related stock. This company has Meta and Amazon as its clients, as well as Rivian, which is the sort of low tier competitor to Tesla. They literally do the excavation and the build outs of some of these data centers. So like the site development. I'm not a construction expert, like not a civil engineer or anything like that, but I know you have to actually build these facilities, and this company literally does that and has massive contracts to do that. So Meta is considering, I guess, a data center in Alberta as well. I don't think this company will get that contract, although there is purportedly not a lot of regulation up there, so maybe that project's more likely to go through in that province of Canada than some in the US that have been a little more stalled. The US data center projects still have a big revenue backlog owed to this company. This company stands to benefit from those when the permitting goes through. It's hard to say that it won't go through when the GDP is essentially hanging by a thread. It's like 0.2% without data centers contributing to that GDP. So I'll keep repeating that statistic because it's so zany. If you like these videos, like these ideas, hit that like button. The ticker is STRL. And let's jump into the chart and some info about it so we understand why we're buying this instead of Meta, instead of Amazon.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is the chart for STRL, okay? It's basically building up some sort of flag type situation, right? Is that actually going to happen? We'll see, but it's definitely gone up 300%. It's gone on a crazy run. Over the past 5 years, it's been on an even more insane run. And the reason is data centers. In the past couple months, it's sort of cooled off, and that's giving us a chance to maybe get in. You can see how it cooled off here. There was a spot to get in as well. This one, maybe looks a little prettier than this one. Hard to say exactly which one looks prettier, but it's just unfortunately that this one day just looks sort of gnarly. If you take that day out, it starts to look a little like less threatening, right? But in reality, that day happened. That was the day in the market when Trump said, hey, let's put some tariffs on China again if they're going to get all uppity about the rare earths. And then he walked that back, and China was actually like, we're still going to export rare earths. It's just that we need to approve them first. And Trump was like, oh, I didn't mean it, guys. I didn't mean it. There's going to be no tariffs. So the market seems to be doing okay. We did have a down day and then a reversal on Friday, still within that massive red bar. Super quick look at the market if you haven't seen it recently. Boom. Oh, coming back up? No, we're not. Yeah, we are. So it's a little choppy for sure, but if you consider the run we've been on, this has been 10% up in actually a little more than that in a matter of just a few months, which is pretty massive for the market as a whole. So to have a little cool down to this 20-day moving average is not so crazy. And this STRL is similarly cooling off, but has an even longer base that sort of cooled off before the market went because it went on this parabolic run. So that's the reason to get in now for another move up. Now, what are we talking about here? Well, data centers. That's what we're always talking about. These things are the economy. We're not like environmentalists or, progressive advocates for, indigenous peoples right now. As investors, with our investor hats on, we want these things to get built. So they are building them. Sterling, this company, has a subsidiary that does excavation and has done site development work for multi-meta data centers. So we know Meta has deep pockets. They're paying like $1 billion a person for some of their employees to do AI. And they also, this company that works for Sterling, also got a $40 million site development contract for Rivian's new electric vehicle center. So, it pains me to look at the Rivian stock chart because it just looks horrible, but it's not really about that little contract. I mean, the main thing I think is the data center things, and that's Meta and Amazon, which basically follow the market because they are the market. They're in the MAG 7, not silver, 7. So STRL is the company, Sterling. This is the chart setup. That's a little bit about STRL and their big clients, including Amazon and Walmart. They do infrastructure distribution center build outs. So, they're massive contractors, and subcontracting companies work for them. So they've got all the big clients. This is a lot of square feet, 200,000 plus in less than it's like half a year, setting a new construction speed record. So they're kind of like actually doing the work to make all this AI stuff happen. Sam Altman might say, we need this, we need that. And they're like, well, can you pay for it? And then making it happen in record speed. So power is also an issue, but they seem to be helping with that. 20 megawatts of electrical infrastructure. So they're able to tack that on, which is pretty impressive. And then this is another big contract, $100 million. That's a lot of feet of underground infrastructure. And I guess that just started. So yeah, the southeastern U.S. is the spot, Virginia, for all these data centers right now. And there's growing demand. So those are the big clients. A little more about like actual earnings, etc. I wouldn't worry about these little buys. These are not super names that I've heard of anyway. Maybe they are in the facilities investing space. They did complete this acquisition for a big contractor for $500 million. So they're definitely able to do both the mechanical and the electrical work. And then this is the crazy part, $2 billion of backlog. So of course, NVIDIA's backlog might be 200 billion or whatever, 100 billion. Sterling gets 2 billion. So this all trickles down. They have earnings, $100 million. That's up 35%. They have net income. Of course, they're making money, year-over-year increase. And everything seems like a go for this company. These are basically some focus areas that I already mentioned. That was the company that took part in the Meta build out. And then you don't need to know these names. I don't need to know these names, but broadly, they do basically transportation, infrastructure, road, highway, civil construction, electrical, mechanical. What it sounds like is they can do work for the government or for private industry. So that's nice to have a little diversification. Container storage as well. So I'm not 100% sure on what that even means. This is from their investor relations website. They also put out their guidance that's increased. They're in Texas. That's basically data center. Mecca, well, the surrounding area as well. This is where those results came from, that ChatGPT pulled from in their backlog, which is book to burn ratio. That's a new metric for me. 1.5x book to burn ratio. We can look that up later if we come across it again. I don't think you're going to come across it again, but it sounds like how much revenue they booked versus how much money they spent. So they booked more than they spent. Kind of just making that up, but I think they're presenting that as a good thing. So anyway, that's where the results came from. This is the $20 million project for a railway company. And yeah, it sounds like not only do they do private, public, they also do infrastructure for railway and storage yards. So containers, maybe containers coming off of ships. Yeah, they're basically expanding, diversifying railroads along the western gateways. I think railroads do ship a lot still that are just more efficient than trucks, or for whatever reason they go in a straight line. I don't know. The railroads around where I live are definitely pretty active, even though not so much for consumer travel. So anyway, that's pretty much all there is to talk about for this company. I know that these are big numbers. This is an example of let's actually state, but government federal project. They have a lot of different sources of revenue. So even if this data center thing doesn't materialize, it seems like this company might still be okay. But sort of the timeline for investing this doesn't really depend on the data center thing not working. I'm talking about a couple weeks, few months or more. Quanta, I've definitely heard of them. So they are sort of similar as well. They sort of deal with servers, which are going to be super important as well. So yeah, these other companies, I don't know. PWR, yes, Quanta, we want to look at that. And then maybe Prim. Don't know that you have to focus on these companies as too much, although I know these guys have been doing awesome. Prim maybe also doing incredible. So it's just so little volume that it's just, I mean, not super worth checking in on too much. Quanta is a little more volume. I mean, this is still, you know, hundreds of millions a day. So keep an eye on them. They're basically the undergirding for STRL is actually less than Quanta. Both these companies are in the conversation, in the same conversation. Without Quanta, I think a lot of these data center build-outs would be not as effective, and it sounds like without actually having them built out, you know, they wouldn't have it all. So that's the argument for STRL. And yeah, I'm starting to familiarize myself more with some of these names that are not the NVIDIAs, not the AMDs, not the Oracles, not the Intels, but maybe more like the AMATs, the ANETs, the networking plays, and then now the data center, the ones that actually build the data centers as well, because I think the big fish have been fried, and now it's time for the backlog to trickle down to some of these other companies that have gone up, but they're then basing, and then as long as that backlog keeps getting actually spent on them, they're going to go up more, in my opinion. So that's the ticker, STRL. If you like these ideas, hit that like button. If you want to see more ideas, hit that subscribe. And if you want to chat about stocks and you want to get ideas that are super up to date, you know, like the best one, instead of 10 of them that are sort of delayed and sort of thrown out in random YouTube videos, head over to stockscommunity.com. You can ask anything you want. And there's also a weekly live stream. We're talking about how I find these stocks before they go up. In many cases, I do my best. Not financial advice, but you can try that out with code Q4 for 20% off at 20% off. Try it out for $25 or less with the code at stockscommunity.com. See you there. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's look at some more stocks, guys, because that's what we do here. But first, more importantly, the economy.
Carolina has reported a 43% surge in animal surrenders versus this time last year. And the Chicago Animal Care and Control has reported that if their surrenders continue at the pace they're at in 2025, they will see 3 times the surrenders in 2025 versus 2024 and 6 times the surrenders versus 2023. And on top of this, adoption rates are also declining, which is heartbreaking. So if you have the resources and ability to adopt a new pet, your local shelter likely really needs your help.
This message is for the ones that don't watch the news or that don't know that it's right in front of them about this current car market crash. So many people are like, not in my state, not in Texas, not in Florida, not in New York. I work with dealers nationwide, virtually every dealership across the country. And here's the telltale signs that you know we are in a true car market crash. For one, the lots are overfilled. They are filled to the brim. In fact, they're in overflow on their side lots because they're so full. Why? Because cars are not selling. They're sitting on lots an average of over 120 days, and we have not seen that since pre-COVID. Sign number 2, dealers.
This sounds like
manufacturers. Dealers are really pumping out. The manufacturers are offering 0
Lots are full.
to 2% financing right now. We have not seen that since pre-COVID
I'm not saying it's bad. I'm just
days.
saying.
The market is crashing and has been crashing since October of 2023. All you got to do is look. And if you want to find out how long a vehicle has been on the lot, you go to a car aggregate site. I personally use Car Gurus and Car Edge. It's going to show you how long that vehicle's been on the lot. That way, when you get to the dealership, you can call them out on their BS and say, hey, look, I'm in front of you. I've got the cash. I've got good credit. I've got whatever it is. I don't need debt, but you need to sell this car. And this car, I want it. It's been on the lot over 120 days. I want it for X. And I'm seeing discounts up to 40% off.
Nashville, Tennessee is struggling right now. And let me explain. I'm a songwriter. I live in Nashville and I live in Georgia. I also own a business and I love the stock market. So let me explain real quick. The venues right now, all of them, numbers are going down. Restaurants, numbers are going down. Apartments, there's buildings that are 40% occupancy. I mean, it's crazy. But the warning signs are there. If you are a market person, you have uninverted yield last August. You have the Feds about to drop their rate. You have a Buffett indicator of 215%. I mean, it's about to get bad.
Buffett indicator.
There's no question.
I gotta look into the Buffett indicator.
People run out of money.
For real, though.
The credit cards are maxed. They've taken out second mortgages. They're trying to do whatever they can to make a living. I feel for everybody. Like I said, Nashville's starting to really, really get hit pretty hard. And we've noticed that from a show that we do. And I have friends who run other main big venues, and they're struggling. And the numbers ain't just kind of off, they're really off. So just, if you got a good job right now, you better do what you can to keep it. But if you can't keep a job, I actually started my own business when the last recession was going on. And the first year was a little tough, but I was opening up when other businesses were collapsing. And the second year started to make a little money, and third year actually I blew up and took off. So there is opportunities out there when you do have a slowdown. So just kind of use that perspective. It's not the end of the world. You can find opportunities. You might have to be uncomfortable for a minute, but it might be a blessing in the disguise for the next 10, 15, 20 years. So everybody stay diligent. Don't watch the news because they're lying. Don't watch the market because it's lying. Watch everything going around you. Watch the people. Watch the spending. Go to the venues, go to the restaurants, and you'll start seeing that people are out of money.
Guys, we very well may be already in a recession, that they're just not publicly trying to say it is what it is. But those of us living day to day, those of us living in real life, we see the cost, we see the struggle, we see how much it is to get ahead. And my whole point for you guys is to understand, guys, you gotta do what you gotta do. You have to do what you gotta do, and that starts with making good choices, good decisions, cutting where you can, saving where you can, holding on to your job, getting another job, getting a side hustle, whatever it may be, whatever it may take. Because guys, nobody is coming to save you, and the way they do it is they'll slowly try to gaslight you into thinking it's you when everybody is struggling. But then we put out a message that everything is okay when we know that's not the case, man. Listen, man, hold your head, stay encouraged. Make sure you tap in each and every day as I try to be diversified in my messaging to teach, show you, and walk alongside you through this journey, man. We make videos like this every day, so if you like this one, make sure you check out the next one. Remember, most people see end result, very few consider the journey. Do me a favor, don't forget to like, subscribe to the channel. Make sure you guys grab some free stocks using my link below, and I'll catch you guys in the next one. Peace.
All right, guys, I think that's the latest Chris saying. I don't know if there's anything a little later. right? I don't think so. No live streams? No. Alright. So let's jump into, what do we got cooking here? Oh, I commented on this Taylor Swift thing. Alright. We'll jump into Felix and then we'll jump into Jeremy for as long as we can manage, and then see if ChatGPT loads. Alright. VTRS. Would be great to have this load. Guess we're gonna have to pull up some backup here. Viatris. That's very thoughtful. Claude. Wow. Reaffirmed full year guidance. Okay. Blah, blah, blah. Did Viatris respond to FDA warning letter? I mean, I'm sure they did, but stock started moving up. If you have any comments, I can see those on YouTube. If you drop those in, and yeah, can help out over there. Otherwise, we'll just be chilling here. Finish this seltzer thing. It's pretty good, interesting, bubbly. It's like definitely more bubbly than other seltzers. So I get the name. They have responded. Remediation plan. Okay. So do they have any connections with big companies? That's kind of what we're trying to figure out here. Oh, they do Viagra and Xanax. Crazy. Okay. And then what do they do for what companies? Okay. Blah, 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 competitors, partnerships. The merger of Mylan and Pfizer's divisions. Okay. Again, guys, I can see comments. I can respond to them if they make any sense. Let's get going. There's one stock that is about to break out. It is a pharma company. They have over $3 billion in revenue. They came out of a merger from one of Pfizer's divisions and another company. And they developed Viagra, which you know what that does. And then Lipitor, which I think is like a fat loss thing. And then Xanax, which is kind of hardcore. So this is a massive company. Pharma's definitely, well, biotech, pharma, I don't want to say which is which exactly, but I'm kind of merging them together, is doing pretty good right now. AstraZeneca somehow sidestepped the tariffs with some sort of like $50 billion commitment. I'll talk about that. And there's some other companies sort of riding those tailwinds as well. So let's jump into the chart for VTRS, the ticker Viatris. And it's not financial advice, but I think there's a lot of opportunity here.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is the chart, and the reason this is interesting is this green line is the 200-day moving average. And if you open up Robinhood or whatever, that green line and sort of lines very similar to that green line come by default on the chart. Just to give an example of how sort of well regarded, how often people look at that line, and how much it matters. Okay, so I'm just delaying while I log in my Robinhood, but don't worry, I'm logged in. We'll jump right in. We'll see that line. And this company as well is interesting because they have $3 billion in revenue. They're the big dog. We'll jump into Robinhood here, but they give money back to shareholders as well. And they also repurchase their shares, kind of like Apple would. So this is like a gold star pharma company. And this is what the chart looks like. Okay. If I just pull it up here, VTRS. You can see these lines here. So these lines really, really matter. In this case, this is the 100. Okay, this is the 100 day moving average. You can see it got over there, held over there, and now it's sort of basing over there. And if I do this, change this to 200, right? You can change this as well. I'm just giving an example and then show that. You can see it just crossed over that line, that red line. So a lot of people would have noticed that. I'm talking like high net worth, family office, quant fund, fundamental long fund, individual investor, retail investor, your grandmother. All of broker charting software show that line. So it's a big deal. So I personally, you can use Robinhood, you can use whatever you want. I am going to subject you to the one I use. Sorry in advance. Or, maybe you like this, but probably not. Everyone likes to look at their own charts, right? So it got over there. It's holding over there. So that's really important. And now there's a low risk entry where you can buy on this higher low. And even as the market sort of cratered, this is showing relative strength, which is actually pretty visible if I open up this thing. It's just going to take a second to load, but you can see on this line down here, 5, 4, 3, 2, 1. There's the line, and it's way up. So let's Reddit. Reddit actually looks horrible. It looks like a short for sure. This one, VTRS, is starting to be up a little bit. Okay, it's not way up at all, but it is showing some strength to the market. So we can see that here. The market went down, and then if we really zoom out, sure, this thing has been fairly weak relative to the market, but interestingly for us, which are medium and short-term investors, I'm talking like I haven't talked in a while. This thing moved up back in August, cooled off, but you can see that it does make quick moves, quick bursty moves, and that's what we're looking for a few months. And it's like, why are you talking about some stock, Sam, that's barely moves up? It's delayed for the market. Why don't you talk about the big dogs? Why don't you talk about Nvidia, Palantir, Microsoft? Well, Microsoft barely moves, first of all. Okay, it did have a good buying opportunity, but then as the market cratered, it just sort of cratered. So although there was low risk, it never materialized. Nvidia was the massive breakout. Slip there, and then it turned into a breakdown as the market did that. And Palantir almost looks like a short here. Okay, it's forming sort of lower lows, and it's super wicky. You can't buy these massive companies, even if they have big growth stories over the next several months, quarters to a year. So with all that in mind, we're looking for little opportunities where there is some relative strength. And that's where VTRS shines. You do want to not get in before earnings. Well, if you do, maybe you get a little move up and then sell some out. Okay. But keep this on your radar. This is the story about this stock. If I pull this up, yeah, it's definitely down. We talked about that. This is the story, this facility issue in India. So this is the story over here. In December 24, FDA issued a warning letter, import alert for Viatris indoor manufacturing, Indori, or whatever that is, in India due to regulatory compliance issues. So this impacted a lot of their products, and this reduced revenues by a lot. Okay, so I think, yeah, the fourth quarter revenues are down year over year, but guidance came in lower than expected. I think that's pretty much been baked in at this point. Okay, the stock got crushed. Okay, yeah, the market came down, but the stock stayed crushed. But now I think there's an opportunity to get in, and notably, they did respond to that letter. So that's really important. This is basically what they did. They submitted a remediation plan. They acknowledged the violations, outlined corrective preventative measures, and they engaged a third-party consultant for ensuring compliance. So, yeah, FDA didn't love it. Maintain the warning letter and the import alert, but they're working on it. And again, the stock price looks like it's still going to go up anyway. And they did mention as well here something about guidance being maintained for 2025 as a whole. So that's pretty good. See here, they reaffirmed their 2025 financial guidance, including an estimated $2+ billion in net cash from operating activities. So even though it declined a bunch, revenue was down a little bit, still guidance is reaffirmed, and they're working with the FDA there in conversations. So yeah, these are some recent sort of highlights, but I'm not an M&A expert. So if they transfer their portfolio for $3 billion, you know, so be it. I don't really know if that's legitimate or useful or not. Of course it's legitimate, but I don't know if it's constructive in the long term or not. Selling something for $3 billion sounds great. Reducing debt sounds good. But as investors for a few months or less, again, I don't know how important that is. These are the drugs we know, and they have a lot of different products. They're in Pennsylvania. They operate all over the country, all over the world. So that makes sense why that India facility, I mean, 1 billion patients is crazy. Why that India facility FDA issue may have occurred. They have a huge number of, you know, it's kind of like Meta having some issue with data privacy. It's like, well, they serve 3 billion people, right? Meta does. So it's not surprising there's issues. Trump is not super favorable in terms of the whole drug pricing thing. You know, he doesn't like private benefit, whatever those are called, PBMs, the things that make pharma a bunch of money. So we'll see what happens, but this company just seems to sell drugs. So, you know, all we have to really say is, are they continuing to do that? They said they reaffirmed their guidance. They still have $3 billion in revenue. I think everything's still a go. And that's the move. It can make explosive moves. It's shown that. It might be like, oh, explosive is. It's pretty explosive, 20%. I mean, it's not a huge sort of, it's not like they've traded a huge amount of volume, you know, $30-40 million a day, but still, there's a little opportunity there for anyone who has less than, say, $50 million in an account. You could definitely throw 5% of your portfolio, $2 million in this company, and you should be all right. Maybe, you know, you cause a little bit of a 20-cent drop or whatever. Someone can tell me in the comments. But there's some liquidity here. And then in terms of these other companies, sure, they haven't done great. Pfizer, Merck, Johnson & Johnson, AstraZeneca, etc. But you know what? You tell me where to invest right now. You can't buy these. we already talked about them. You can't buy, Amazon looks bad too. You use really not a lot out here. The super speculative stuff is coming down, rare earths, quantum, etc. So you have to look for little pockets of opportunity. I think this is one such pocket. And yeah, there are some sort of broader market trends as well that do matter. Besides just their earnings, I think the whole AstraZeneca sort of tariff agreement is important. Basically what happened was AstraZeneca committed to a $50 billion investment in US-based research and development over the next 5 years in exchange for a 3-year exemption from tariffs on imported drugs. So this is what Trump's all about. 3,000 jobs in Virginia, and people are excited who are investors. So that's from Barron's. So there's that, and then there's the AI thing. Tempest AI is an example that's recently had a big jump up in price. Pfizer committing to AI drug development as well, of course. ChatGPT, OpenAI, Sam Altman, always using drug development as an example. Cancer treatment, imaging improvements as to why ChatGPT is basically going to save humanity. Whether that's true or not, we'll see. But in the meantime, it does paint a rosy picture for these pharma biotech sector companies, and VTRS is in a good spot to buy with low risk, maybe a risk 50 cents or something. And, maybe back to this level, here, and look for a few dollars or more. So that's the idea. If you like these ideas, hit that like button. If you want to get notified when they come out, hit that subscribe. You only get notified 3 times a day, so don't worry. If you're a normal, busy person, you don't have to watch all the videos, obviously, but you could. And if you want just to keep up with me in general, head over to stockscommunity.com. You can just ask me questions over there about what you want to know. You can try it out. You get 20% off if you use code Q4. That's Q, the letter Q, and then 4. So give it a shot for 7 days. It's like 20-ish bucks, 25 bucks. I'll see you in the next one. Good luck.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right. What else we got cooking here, guys? So that's VTRS. I wonder if we can do a little check-in with Felix.
Well, Nvidia just set a $4.5 trillion market cap, and AI stocks are pushing the S&P 500 to dot-com bubble levels. There is an $800 billion debt bomb ticking in the shadows that almost nobody is talking about. And when it explodes, it could take your entire portfolio with it. Right now, the companies that are supposed to fund the entire AI infrastructure boom are quietly, imploding. Blackstone's private credit fund just hit its lowest level in over 2 years. Blue Owl Capital is falling off a cliff, and the math behind what's happening is absolutely stunning. If you own tech stocks, index funds, or anything tied to the AI boom, you need to understand the circular financing scheme that Wall Street is using to prop up valuations. Because history shows us exactly what happens when vendor financing circles collapse, and it's not pretty. My promise to you is that by the end of this video, you'll understand the massive financing gap that nobody can fill, while the world's biggest private credit firms are crashing while AI stocks soar, and most importantly, how to position your portfolio before this all unravels. My name is Felix Preen. I'm an ex-investment banker who's seen how Wall Street really works from the inside. I've watched these schemes unfold before. I started investing during the dot-com bubble. That didn't turn out too well. The pattern is always the same. I'm also the founder of the GOAT Academy, where we have over 20,000 students, and the co-founder of TradeVision.io, where we give you guys access to the news and the data that Wall Street has access to. But right now, Wall Street is running one of the most elaborate financing circles I've ever seen. And look, this is not theoretical. We're talking about companies like Oracle announcing $300 billion deals they literally cannot afford to pay. And the private credit industry that's supposed to bridge an 800 billion, maybe even a 1.5 trillion funding gap, well, it's actually collapsing. So it's the kind of situation where retail investors get absolutely destroyed if they don't see it coming. So let's break down exactly what's happening, because the math is just staggering. What's actually happening in the AI industry right now is this, and I want you to really understand this. Write this down because it's critical. Let's say OpenAI needs computing power to train its AI models. They go to Oracle and they sign a massive $300 billion deal over 5 years. Sounds great, right? Oracle's stock jumped 43% when they announced it. But here's the problem. Oracle doesn't actually have $300 billion sitting around. They have a debt-to-equity ratio of 500%, so they have 5 times more debt than equity. Compare that to, say, Amazon, it's 50%, Microsoft 30%, Meta and Google are even lower. So what does Oracle do? They go to NVIDIA and they say, we need $300 billion worth of chips and infrastructure. NVIDIA sells them the equipment. Then NVIDIA turns around and invests or provides vendor financing to, you guessed it, OpenAI and other AI companies. It's money going around in a circle. OpenAI sends money to Oracle. Oracle sends money to NVIDIA. NVIDIA sends the money back to OpenAI. JP Morgan calls it the infinite money glitch. Goldman Sachs' head of Delta One trading calls it an increasingly grotesque vendor financing circle jerk. Now, why is this different from normal business? Vendor financing isn't inherently bad. If you're a profitable company using your cash flow to help customers buy your products, it's not actually a problem. Apple does this with upgrade programs. Car companies do it all the time. But here is what makes this different and dangerous. These companies don't have the cash from operations. Oracle's cloud infrastructure revenue is projected to go from 18 billion to 144 billion in 2030. That's sort of this hockey stick projection that requires everything to go perfectly right for 4 straight years. No recession, no competition, and no problems. They're funding it with massive new debt. And according to analyst estimates, Oracle may need to borrow 25 billion per year, that's 100 billion over the next 4 years, just to build the data centers for this one OpenAI deal. And the customer, well, he doesn't have the money either. OpenAI's annual recurring revenue is about 10 billion a year. They're signing deals worth 300 billion over 5 years, which is 60 billion per year. They need to 6x their entire revenue, and for that to be pure profit to pay Oracle. And that's obviously before paying for anything else. Now, before we go deeper into how this all is a problem, what we do about it, I want you to literally learn the one secret that Wall Street doesn't really want you to know, and that is not how to find the greatest stock in the world. No, it is how to keep your profits. When do you sell? When you're on a...
Okay. It's a good message. Let's jump into a little breakdown, though, on some interesting companies, including Celsius Energy. It's an energy drink. So... also want to do, see if I can just pull up some meta AI here. Da, 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 da. It's gonna make me log in or what? What the hell? Canadian Energy. I didn't even realize they were Canadian. They're Canadian? I don't know about that. Alright, I guess Coke would be pretty interesting. Okay. Okay. Celsius. Yeah. Hiking. Okay. I feel like gaming is bigger than hiking. All right. Basically, a bunch of people are gaming. 35% of consumers report regular energy drink consumption. Wow. Okay. Jump into a breakdown. I can see comments on YouTube. Let's get cooking here. There's one stock that is about to bubble up here. It is an energy drink stock, if you can believe it. The best performing stock in the last 20 years was a company called Monster Energy. If you can believe it, bottling water basically and selling it is really profitable. So this isn't a data center company. This isn't a AI startup, like some sort of spin-off consultancy that's adopting AI and going AI first or anything. This is literally energy drink in a can sold at your grocery store. The ticker is CELH, Celsius. You've probably seen their ads. If you can believe it, 35% of consumers aged 18 to 29 report regularly consuming energy drinks. 35%. That seems like a lot to me, but maybe I'm not super on key with like your average 18 to 29 year old. I mean, a lot of people are gaming. A lot of people are seeing Celsius ads everywhere. I see them on this huge Theo Von podcast, and Red Bull's privately held, but you can trade Celsius, CELH. So let's look at the chart, and let's look at Coke's chart as well to see how the beverage category is stacking up.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here's Celsius. Yeah, have they sponsored gamers or what? I'm really testing the LLMs here. Yes, they have. They sponsored and a lot of influencers, gamers, tournaments. This is the demo, of course. And Monster, again, I mentioned the best performing. Red Bull, you can't look at how it's performed, but this is basically the trend. They're a symbol of the gamer lifestyle, and it's $1 billion market, right? It's not a good business, esports. Investing in esports is not a great business because what are you going to do? Rent out a stadium and then have all these gamers come and then none of them have money, and what are you going to sell them? Like energy drinks, I guess. So you can get sponsors, but you can't really sell these people a lot except for actual consumable products that are do well in recessions, right? Little energy boosts, little vices do well in any environment. Celsius is, similar to, I put Domino's. Domino's is also an incredibly well-performing stock that's sort of, in the same category, super strong brand. And if we look at actually some numbers, revenue grew to a pretty insane degree, 800 million, almost about 700 compared to 400. So it's almost doubled. And I'm going to look at a few more little pieces of revenue information about this company. Before we dive into the chart, I do want to mention this acquisition of Rockstar from Pepsi as well. And so Pepsi owns 10% of Celsius, but this is also how they get distribution. So that's a pretty huge deal. 40% of Celsius sales are through Pepsi's network. So yeah, doesn't hurt. This is the chart. Did sort of shape up and then came out to this level. You can buy it with relatively low risk, and this thing should give an opportunity to go up. You don't want to be holding through earnings in general, but it certainly looks pretty strong compared to the market. This relative strength. Blue line here is sort of creeping up here. Here it obviously went up a lot, but that's just compared to the SPY. So the SPY is like the overlay in the background. You can see how the SPY sort of dropped down in the last week and then chopped sideways. Meanwhile, Celsius is held. So it hasn't done like incredible, right, at all. Well, I mean, actually it kind of has. It's been up 60%, so it's well outperformed the market. It just looks bad because it cratered back in 2024. But if we look at other beverage companies, Coke, you know, it's doing good recently, but this isn't a company that you really want to jump in. It only moves 3% a day. Monster is interesting for sure, but right now I don't know how interesting it is. It's only gone up 20%, which is pretty much how much the market went up, or less. Market went up like 30% since those April lows. So this is kind of a slow mover at this point, 2%, even though, like I said, it is the best performing stock of the past, like, I think 2 decades is what it said. It went from like $1 to $70, something crazy. I know Nvidia did something pretty crazy as well, $1 to 180, but something about Monster, you know, it's possible it was a penny stock, which maybe made it more like, you know, 20 cents to $7. I'm not sure. We're not going to try to do some sort of Guinness stock records thing here. All I'm trying to say is this category is massively growth oriented, and Celsius is setting up well. So we'll jump into a little more info before I sort of wrap this up here about Celsius. Morgan Stanley upgraded them. You know, that's great, whatever. It's a good investment bank, but we don't look at those upgrades too much. A little bit of a just some sort of loose ends tied up with one of their influencers, I guess. I think that's probably just a sort of you know, pothole or whatever. And then they had this labeling issue, and that's behind them as well. So a couple speed bumps, and then yeah, we talked about that acquisition. And if we look at Monster, they're doing well, over 2 billion net sales, and this is interesting, right? So this is interesting for Celsius as well, because Celsius, if you walk into like Walmart or any of these, like we have a beverage sort of store, like a beverages only store around where I live. So Celsius is featured, you know, it's like end piece featured, whereas maybe Monster isn't. I haven't specifically looked at this sort of channel check, you know, where you walk in and you see actually some of these products you can actually walk in and see. But so that's a reason where Monster is not so great, but Celsius might be doing so well just because they've been doing so much online advertising and ambassadors and brand deals and stuff like that. You know, essentially how Squarespace took over like Spotify ads, you know, 10 years ago. Celsius is doing that now with like podcasts and all that. So the Rockstar buy might be something to do with that, sort of putting their marketing engine into energy drink that is already really well known. This is good to be able to pay down that debt at a lower interest rate. That's nothing bad with that. And now what I don't really know about this company is, are people going to still like Celsius, you know, a couple years from now? And honestly, I don't know that it matters, right? because all that we really have to do is say, can we buy this and can we recover some of this drop back in mid 2024? And I think there's an opportunity here over these highs. I don't think there's any too big drops. I mean, this drop was obviously the whole market drop, but moves 5% a day, and these other drops, the biggest one was probably like 5-6%. So nothing too crazy to worry about here, which is great. We don't want to be worrying about anything crazy as the market chops around over potentially the next month. It could be fine. You know, we could just keep chugging up, but it's nice to know that there are some companies that are doing well despite not being in the AI sector. So this revenue's down a little bit. This might be sort of the challenges that we just saw with Monster, where they're not being stocked and people aren't buying them in convenience stores, so they're not being stocked in convenience stores. It's a self-fulfilling cycle there or whatever. But this is the return from Monster, 100,000%. I'm not saying it's going to do a Monster type move. The energy drink category is more mature for sure, but it does seem like this growth rate is pretty insane, 40% compared to the industry average of 5%. And that stat has stayed insane to me. 35% of 18 to 29-year-olds drinking energy drinks on a regular basis is completely crazy to me personally. But maybe I just am not as keyed in to drinks as I should. And yeah, there are, I mean, this is another competitor. But is that, I'm not even sure if that ticker is that ticker on the NASDAQ? Or is that just the company name? Yeah, it's not on the NASDAQ. So I'm just going to tune out before I start digging myself a hole here, because I don't know a lot about energy drinks. I don't want to know a lot about energy drinks. I don't know a lot about Canadian companies. This is a crazy way to play it if you're crazy, you know, which a lot of energy drink people are. You can get 2x leverage. I don't think 2x leverage is a good idea, except for occasionally you can find inverse ETFs that are only existent because they do offer leverage. I've mentioned the inverse gold ETF, which is 2x. I mentioned dust, which is a way to make money as gold goes down. But this is the ticker. That's the play. That's the growth story, similar to Monster. Revenues are in the hundreds of millions. They have that big online advertising push. They're recovering a big drop to some sort of fill the gap, momentum, whereas other companies might be playing more off the market. Celsius might be playing more off of this, gap recovery. And then other companies like Coke are also going up recently. So, haven't done great, but this is definitely the outperformer. So it's an idea. If you like these ideas, hit that like button. If you want to get notified when they come out, hit that subscribe. And if you want to share your portfolio, might have, all of data center names, might have big names like Microsoft, tech names, NVIDIA, Tesla, might have slower moving names, whatever's in there, pharma names, quantum names, airlines, UAL, cruise ships, ECL, Carnival Cruise, whatever it is. If you want to chat, you can head over there, stockscommunity.com, use code Q4 for 20% off. And I will see you in the Discord there, and we can talk there. Probably won't be responding to YouTube comments much, but trying to put out info here. It might be delayed because YouTube likes it when you delay it. But that also means the community becomes more valuable because I just give the best idea right when I have it in there. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's tune back into a little Felix here. Here we go.
Bull market like this, at some point, you got to take profits on your stocks. And it's not some random percentage. It's a little bit more elaborate than that. And I'm going to teach you that if you wish to learn it. And it's going to be next week. It's going to be live at felixfrenzel.com/training. And you can get your pause on that free training live. There'll be no replays. You got to show up. And it's about understanding how Wall Street decides when to sell. Because the worst thing you can do is have this big, beautiful paper profit in your portfolio and then watch it collapse as the market might tank. So that'll never happen to you again if you join me for free at felixfriends.org/training. So let me give you the numbers. And I want you to really let this sink in. According to Morgan Stanley, the total global data center spend through to 2028 will be about 2.9 trillion. And they break this down. 1.6 trillion on hardware, chips and servers. 1.3 trillion on building the infrastructure around it. So we're talking about an investment need of over 900 billion every single year. Now, to give you an comparison point here, the entire S&P 500, all the 500 companies combined, spend about 900 billion in all of their investments on everything, not just AI. So we're basically saying the AI infrastructure alone will require the entire capital spend in 1 year as every major corporation in America spends on everything combined. That's kind of staggering. So where is the money going to come from? Well, let's break down the sources. You've got cash flow from your Microsofts and Amazons and so on. The big tech companies, Meta, Apple, Amazon, Microsoft, they can self-fund about 1.4 trillion from their cash flow over the next 4 years. And then you have debt issuance. We're looking at about $200 billion of debt that these tech companies are going to issue in regular bonds and sell to you and me and other people out there. Then there is another market called the securitized market, where they can get about another 150 billion asset-backed securities and commercial mortgages essentially tied to those data centers. It's like a mortgage on a data center. Then you've got to go one step lower into the cockroach area. Sorry, did I say that out loud? The private equity, the venture capital funds, and sovereign money too. Nothing unclean about that either. $350 billion you can possibly get there. This is based on investment bankers' research. So the gap is still $800 billion. So even after adding up all of those sources, we're still $800 billion short. Some estimates say it's as much as $1.5 trillion that's missing. Depends a little bit on how much you're willing to fudge your numbers. Now, private credit was supposed to be the hero that fills the gap. Wall Street plan was to fill it with private credit. These are firms like Blackstone, Blue Owl, Apollo, Ares. They raise money from pension funds, insurance companies, wealthy individual, and then they lend it out at higher interest rates to companies that can't access traditional financing. The private credit industry has grown massively over the past decade. They were supposed to be the solution, the white knight who would fund this AI infrastructure bonanza and earn nice returns for their investors. Here's the problem nobody's talking about. While Nvidia hit a record market cap and AI stocks continue to soar, something very strange is happening in private credit. Blackstone Secured Lending Fund, ticker symbol BXSL, well, it's tanking. It's massively underperforming the S&P. It's at the lowest levels in over 2 years. Blue Owl Capital, another one of those big private lenders, ticker symbol OWL, well, again, they're falling off a cliff while tech stocks are soaring. And that's your canary in the coal mine. These are the companies that are supposed to provide that extra 800 billion in funding, and the market is telling you they're in serious trouble. Why are they collapsing? Well, there's several problems hitting private credit all at once. One, consumer credit exposure. So private credit firms aren't just lending for AI infrastructure. They're heavily exposed to consumer credit. Buy now, pay never. Later. Auto loans, personal loans, and guess what? The non-performing loans are skyrocketing because the low-income crowd, they got crushed by inflation, and now they got to start repaying student loans again as well. So they're really screwed. And then number two, there's a little problem. It's called a $5 trillion problem. According to the Financial Review, private equity is sitting on $5 trillion of existential dread. A staggering 18,000 private capital funds are trying to raise trillions of dollars simultaneously. And when everyone's trying to raise money at the same time, it's usually a sign something is about to break. The problem is that they promised very high interest rates, high returns from high interest loans. And they're not materializing as expected because default rates are rising. Refinancing is becoming difficult with higher interest rates, and the whole model is just under stress. So what does it mean for you? Well, if private credit can't fill that 800 billion gap, one of three things has to happen. Option A, AI spending gets cut dramatically. Companies slash their projections. Data centers don't get built.
All right, let's jump into a little breakdown here. IONZ. Let's good and go. Here we go. If you have any questions, drop those in the YouTube. I'll do a little breakdown and then check in there. There's one stock that is about ready to explode. It is quantum related. Quantum computing has been the subject of a lot of controversy. Some people love it. They're saying now is the time. These companies are worth billions of dollars. This company in particular, it has a connection to Google. Google is partnering with them on research. So, don't want to use the R word, but yeah. And then Microsoft also is partnering with them on Azure, which is their cloud platform, similar to Google Cloud. And they also are working with AWS, Amazon Web Services as well. So quantum is getting integrated into the big companies, whether it's into their future-looking projects or their present revenue-generating projects. That is the unknown. And for that reason, well, it's not really unknown. We know that these companies don't have much, if any, revenues at all, despite their $1 billion of valuations. The ticker, I think, is going to explode right now in the upwards direction is IONZ. It is related to IONQ, and it's not financial advice. Let's jump into the chart and the reasons why IONZ is the buy right now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
This is the chart for IONZ, and you can see there's a lot of volume coming in here. And this thing starts to look like it's curling up here. So you pretty much no relation to the market. This blue line is the relative strength to the market. You see it's not strong, but it's also not getting pummeled even more. And I'll just show you how that blue line works, right? See how it goes way up here when the stock goes way up and the market does not go way up. See how it kind of does nothing down here when the stock goes up. Even here, it does not really much here when the market does go up. So this is just like beta or alpha to the market, whatever the Greek letters are, whatever they mean. Pretty much did way better than the market here. So here's the deal. This stock did way better than the market here. It's a quantum stock, IONQ. Pretty awesome. Did mention it, talked about it for sure. And then, yeah, now we're up whatever we are, 100%, and coming down here. So this is a sort of critical level for IONQ. I would not say it's a buy level, okay? It's pretty much here. It could curl up, it could do fine, but notably if it loses this level, that's going to be trouble. And for that reason, IONZ is interesting. You can see it also looks like it's at a critical level. There's no coincidence here. This is a 2x short IONQ ETF. So this goes up when IONQ goes down. So this is basically a investment in quantum's overvaluation. So if you think quantum is overvalued, you might invest in IONZ. So that's the idea here. This is sort of the risk level, risk $1.50 for, a big move up to 7. It is 2x leverage. So, approximately if IONQ goes down to from 60-ish, 16 change to, let's say just, well, to make it super simple, let's say it goes down from 60 to 45, right? That would be 25% down. Then this will go down, this will go up 50%. So this will go up from 3 to half of that would be like 1.75. So it'd be like 5 and change somewhere in here. Okay. So that's sort of the opportunity here. A big move up, 50% is a lot, even though it doesn't look like it. But if we move the chart over to just recently, yeah, it does start to look like a pretty big move. where you're risking maybe off of this level, something like that. This is it's actually a lot of volume. This is a fair amount of volume for an inverse short little ETF or whatever. Exactly, it's called 2x short daily ETF. Daily meaning it's rebalanced daily, so like they check on the IONQ's price daily. We can look into exactly how they do it, but in general, you're just saying, hey, I think this is going to go down, okay, which is not such a crazy idea, given that it's up a ton. So that's the charts, and then these are the collaborations that IONQ has. So those are reasons that give it legitimacy, but also reasons that give hesitancy to investors, like research initiatives. Like no one is excited about quantum right now that's an investor. They're excited about it in like 5, 10, 15 years, maybe 10 years at a minimum. So it's great that they're partnered, but there's definitely some negativity around their current price. Okay, that's a lot of pages. And basically saying that the CEO is not sort of representing their current business opportunity accurately, I would say, is sort of a euphemistic way to put it. So, yeah, the case is dismissed, insufficient, but does sort of just muddy the waters a little bit about if you want to be buying this company expecting it to go up more. So, there's also the concern about if you are jumping in at this price, are they going to sell you stock? Meaning the stock price is going to go down because, it can't go up forever and they need to raise money. Well, they don't actually need to raise money because they have a lot of money. But they still could offer. This offering ability is high. They're a quantum company. They're not making a lot of money, so they need to raise a lot of money. You can see they do raise a lot of money. This is a $2 billion offering, $93 just about a week ago. So maybe you'll say that's a pretty massive price. They're down a lot from that. That's always the concern. I don't know if those, price movement down is directly related to this offering, but it wasn't a bullish offering. The price didn't go up. So with them raising every 3 or so months, maybe they won't raise for a while probably, but still they can. They have a lot of capacity left. And yeah, I don't know that they have a active at the market offering, meaning they won't just offer directly. You wake up and the stock's down and it's because they have offered, sold shares, which they're allowed to do if they have an ATM, but again, it's not active, it's terminated. So you don't have to worry about that. But with all of these sort of factors, I don't think you can be very excited about buying this company. So I'm not here to make the bear case for this company. I think that case has been made by other people. They do have, some projects. The Air Force is getting a $20 million contract with the Air Force is something. But again, we just looked at the market cap, and the market cap is not hundreds of millions. It's 20 billion, right? So something is not quite adding up, right? So that's IONQ. We can compare it to the other companies. IBM, of course, the juggernaut incumbent, and maybe IBM is more mature to even Google, but obviously I can't recommend or even there's nothing really to talk about to IBM because quantum is just one of its business units, right? And it also moves only 4% a day, and it's not moving in a super linear fashion right now anyway. Google Willow is the sort of quantum processor that seems to be working with IONQ. This is Claude just hallucinating here. Don't worry about pizza. I was asking it about pizza earlier. Well, specifically about Domino's Pizza performance. But stock performance. All you have to really say with this is if this is going to be the next big thing, there's going to be another opportunity to jump in. So we're not really looking at all these benchmark improvements because we're not scientists. At least I'm not a scientist. And, you know, maybe they're working with Amazon AWS, working with their chip teams, and maybe that'll be great. And maybe IBM will crush them, right? Which has a massive, maybe the incumbent will win. There's arguments to be made in any different fashion, but I think IONZ is the best idea right now, which is to say, you kind of want to bet that this IONQ is going to not do so good. So it's a lot of exposure, 200%, you know, 2x. And, you know, there is a little expense, so that sort of gets passed on to you a little bit. But I think compared to buying it or doing nothing, you know, if you want to put your money to work, I think there's a pretty, well, a safer way than buying it is basically buying the inverse ETF. And I don't even want to mention the SH word, SHORT, because that's certainly not safe for most of the people watching this. So I think IONZ is a way to buy a stock that it does represent, you know, that another stock's going to go down, but that's sort of the market we're in. So I gave you the levels. I sort of gave you a target of it, and then, well, not a price target, but a sort of expectation of where it could go based on the price of IONQ coming down to 45. And the market could drift down a little bit, which I don't think IONQ is, quantum's that related, tied to the market, but it certainly could follow the market down if the market does go down. Market might go up and IONQ could still go down. I mean, these companies are incredibly extended, which was, of course, awesome when to be long them, 180%, but also, you know, at this point, like, can't really recommend buying them. So that is the ticker, IONZ. If you like these ideas, hit the like button. If you want to see more, hit that subscribe. And if you want to get help, head over to stockscommunity.com. I can help you over there in a Discord group. Discord is just like Facebook groups, but it's like a chat. So we can chat there. It's like a group chat. It's a big group chat. It's not a big group chat. It's not a lot of you have the opportunity to ask me a lot of questions right now, which may be a limited time sort of availability. So take advantage of that if you think that's interesting. And you can use that code Q4 for 20% off. See you over there.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's jump back into some Felix here.
Build and the entire AI infrastructure boom slows down. What happens to Nvidia's 4 trillion market cap if spending drops like 30 to 40%? Well, you do the maths. Option B, hyperscalers. So your Microsoft, your Amazons, they take on massive debt themselves. So they start leveraging up their balance sheet like Oracle did. This would be unprecedented and risky because remember, Oracle has like 500% debt to equity ratio. The hyperscaler go down that route. What happens when the next recession hits? Problematic for the Mac 7. The third option, the government steps in. Massive government subsidies and guarantees to keep the AI boom going. And this could work, but it creates a huge moral hazard for taxpayers and risk for taxpayers. So none of these options are really very bullish for your portfolio in the traditional sense. Option A crashes tech stocks. Option B creates massive leverage risk. And option C might keep things inflated for longer, but it creates a huge systematic risk.
ETQ.
But we've seen this movie before. Go back to 1998. The internet was revolutionizing everything. Companies like Global Crossing were building massive fiber optic networks across the world. The stock soared. Everyone knew the internet was the future. And you know what? They were right. The internet was the future. But Global Crossing still went bankrupt in 2002. Why? Because they built too much, too fast, funded with too much debt before the revenue could possibly catch up. The infrastructure was real, the technology was real, the potential was real, but the financing, well, they couldn't afford it. The capital circle always turns. And here's what's happening in these infrastructure build-outs. Stage 1, You get new technology, emerges a revolutionary potential technology. Early investors make huge returns. That was 2022, 2023 for AI. Stage 2, the money floods it. Returns look so good, everybody pouts, and spending accelerates, valuation soar. That's right now, by the way. Stage 3, the competition intensifies. More players enter. Everybody's building the same thing, and you get overcapacity. We're getting there, right? Remember DeepSeek? And then you get to stage 4. The promised returns, well, they collapse because we have too much supply, not enough demand, prices fall, debt comes due, and the weakest players fail. That's the next step. Stage 5, you get consolidation. Only the strongest survive. Debt gets restructured or written off, investors take massive losses, and eventually the technology succeeds, but most investors lose money. The dot-com parallel is striking. Check out these comparisons then. The internet changes everything. Valuations hit record highs, companies are spending billions on infrastructure, vendor financing propped up the entire ecosystem, and everybody said it's different this time. Bubble peaked in March 2000. Where are we right now? What are the headlines? AI changes everything. The S&P valuations are near .com levels, and companies are planning to spend almost $3 trillion on infrastructure. Vendor financing is propping up the ecosystem. Everybody is saying it's different this time. So are we near the peak? Well, according to Deutsche Bank, web searches for AI bubble peaked in August this year and then plummeted. And you know what happened around the .com bubble? Concerns peaked in late 1998, well before the actual crash, which was in 2000. Bloomberg put a story out in late 1998, quoting investment managers saying this is a serious bubble. Nasdaq was at 2,000. It went to 5,000 16 months later, and then it collapsed. So when everybody stops talking about the bubble, that's often when you are closest to the top. Right now, concerns about the AI bubble have dropped to just 15% of the August concerns. So what am I saying to you? I'm not saying run out and sell all your tech stocks, because I think we could potentially go a lot higher. What I'm saying to you is make sure that your gains don't become losses. Because if you let that happen, then this entire rally that you've been part of and that's hopefully been making you wealthier, well, you will give all that away. And we don't want to do that. So what I'm saying to you is learn when to sell the way the smart money sells. It's much simpler than you think, but it is also not what you think. If you want to come learn that, join me live next week at felixfrenzel.com/training. That's our mission here, to spread the in-depth education. We can't always do that on YouTube, so we do it in a private setting. And I want you to grab yourself a seat for that. And the second thing you might want to do is stay abreast of the AI news. How do you do that? Sign up to Trade Vision. There's a link down below. You make a watch list with all the AI stocks. I think we've already done it for you. And you just turn on a little thing which says, get me news notifications. We will send you news pop-up notifications on your phone, only relevant to your stocks, the ones you select, and only the news that actually move the market. We don't give you all the noise. We don't give you the general gibber. We don't give you all the woke bollocks that doesn't affect your stock prices. So you no longer have to read financial news, watch CNBC or any of the other dross out there. You will just be informed. And there's a free trial for that down there as well. It's a free week after that. I think it's $19 a month or something. It's insanely cheap. And there's a ton of stuff extra in there. So if you got some value out of this, share it with a friend. Because I tell you what, people weren't listening in 1998 and 1999 and in 2000. They're not listening now. So let's change that. If you have a 401k, a savings account, stocks, bonds, or even just cash sitting in the bank, what I'm about to reveal about America's debt crisis could either protect your wealth, well, or leave you pretty devastated, potentially by 2026. According to US Treasury data, just released a few days ago, America's national debt just hit about 37.5 trillion.
Well, that's a lot of debt. Whoops. Alright, maybe we'll watch the plan, but maybe we'll watch this thing. I don't know. Cross that bridge when we come to it. Right now I just want to know if ChatGPT is going to catch up. Doesn't look like it. Maybe Claude will help us out here. What is going on here? Okay. Okay. It's got some volume. It's got some recent news. Oh boy. Well, let's get going. There's one stock that is about to break out. It is a quantum stock. It does have a research collaboration with the University of Cambridge that is in the UK. Typically, you know, the UK is not like the US in terms of tech, economic opportunity, startups, all of that good stuff. However, they are top tier in terms of research and innovations. So they have been leaders in AI. They've been at the forefront of Google DeepMind, had offices in the UK as well, which is very similar to ChatGPT technology. So BTQ is the ticker, BTQ. So it's not IONQ. It's not these quantum stocks that have already gone up, Rigetti, QBTS, etc. It's BTQ. Let's stick with the chart. Let's look at the minimal revenue and why that might not be a problem if we're just using it as a momentum play. This is not financial advice, but let's jump in.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So here we go. This is what we got going on here. This is the chart. There's not a lot going on, right? It is a sort of uplift situation, but we do have what we like to see, right? A low risk sort of flag opportunity. Did move down when the market went down, so it does follow the market to some extent. It is on the NASDAQ. The volume is not massive, but it's definitely there. And you risk 50 cents, risk $1, look for a few dollars, $5, $10 up. So that's sort of what we're looking for here. And we can jump into a little bit about those partnerships and the revenue, which the revenue is, of course, not really there. Okay. But they do have some pilot programs, top 5 US bank. Cybersecurity is massive, growing. And they are an early stage company. They are listed. But yeah, let's not look at what that is per month. That just does not sound good for a NASDAQ listed company. They have some plans to license their IP. I don't know exactly how awesome their cryptography, their encryption, their product is. But yes, they're middle of the pack, okay, in terms of what you can buy them for and how much they're selling for. So that's actually an insane pack to be in. I mean, IONQ is in the billions and they have whatever, some millions of revenue. Same with Rigetti, I believe. Same with QBTS. Quad keeps putting this Domino's Pizza citation here. That has nothing to do with any of this. I was previously looking up information about Domino's Pizza stock price appreciation, but this is true, I believe, which is crazy considering they have about 500K-ish, less than $1 million of revenue. Yeah, shows how speculative the tech sector is. But that's what we're up to right now. It does have some volume. Its technical analysis works really well on recent IPOs because there's not much else to go off. But there's not much news. There's not much chart history. So there's not many buyer and sellers, which means that the supply and demand imbalance is very much follows from what we exactly see here. We see the most price and most volume trade at this price, and this is where the buyers and sellers are. So there's some buyers and sellers spread out among here. Maybe they sold, a lot of them sold here. Maybe it has to get back over this level before everyone's making money who bought and sold in here, and then there can be a move up. BTQ is the ticker, all right? Now, let's look a little bit at, they need cash, all right? They have the ability to offer to sell shares so they can raise money. So that's actually good for the company long term. It's not good that they need cash short term, because that means they can dilute their stock and raise money from you, basically, or me, or whoever buys the stock. They, create shares and expand the number of shares available, which creates a larger supply, which makes the stock price go down. So there's not a lot of info on this stock. There's not a lot of dilutive instruments. There's not a lot of history, basically, at all, because it's a recent IPO. But we do know that they're in quantum. They're pre-commercial, pretty much by definition of their revenue. Of course, they would be great to have hardware, software, and cryptography, and it would be great to have really valuable IP. But all we really know is that they have significant collaborations. These are institutions that really matter. Waterloo is a huge pipeline for tech into San Francisco and the big tech broadly. University of Cambridge is very advanced in terms of research, including in computer science and quantum physics. I guess this would be called physics. And then, they are making some acquisitions to move towards a cryptography hardware future that actually generates revenue and is a useful product. So what can you say? It's a very speculative idea. There is big money opportunities, but now we just have to see if maybe they can make some of these investments, make a little bit of money, and basically just stay listed. So I'm not saying this is like the best company on the market, but it might be the best opportunity right now. So that's all I can really say. They do have these partnerships with South Korea entities, and you can see that up here as well, and with a company in France as well, which makes sense. They're sort of UK connected for sure, it looks like. This being the sort of most brand name photonics quantum name. But all we have to look at right now is basically, can they hit their milestones? Is that going to convert to revenue? Are there going to be any big contracts, any news that comes out that could make this thing really run? Because right now, what can I say? It's traded for less than a month, really. But the volume's sufficient. The dollar volume, is 100 million. So if you had 50 million account and you put 5% of your account in there, $2 million in a stock that trades 100 million, you wouldn't move the price at all. You'd be perfectly comfortable buying and selling this stock, not after hours, obviously, but in any of these white areas, 9:30 a.m. to 4 p.m., there's enough going on here, enough buyers and sellers that you're going to be fine. So this is definitely very much applicable to a wide audience, 500,000 shares every 5 minutes. And you can risk relatively safely. I don't generally look at the intraday chart, but just to sort of show you, worst case scenario, which is fair to show you, if you mark it in, instead of limit order, you just press buy on your phone, basically, it would be, a way to do this. There's almost 1 million shares traded, and there actually is 1 million here, at a little over $10, right? So the maximum liquidity you could put in maybe in a single 5-minute period, 100,000 shares times 10 would be $1 million position in a single 5-minute period. Of course, you could spread it over a longer period than that and get in more than that. And then if the worst case scenario is you're down from 13 to, you're 20% down to $10, so you down 200K. So that's sort of the risk you undertake with a company that moves 4% a day and that trades after hours. 4% is the average daily range over the last 10 days. If you're actually also including these wicks, which I have here, You can see the range is actually much more significant. It's not 4% at all, actually. I don't know what that is. I was looking at this. That makes a lot more sense. It's 30%. Okay. It's like just racking my brain trying to explain this in a way that actually makes sense at all. 30%. Okay. So the volatility is crazy. Okay. But if you're put a position in here that you're comfortable with, and you're comfortable with these wicks, which again, this is a 24-hour chart. So this opens at 12 a.m. That's the open. Actually, the open would be up here at the top of this red candle. The green candle, the open would be down here. And then close at 4:30. Well, close would actually be at 12 a.m. the next day. So, for example, this one pretty much went sideways down a little bit. Right, yeah, pretty much sideways down a little bit. Right, and then it wicked up. So this is the wick up that we're seeing. So that's what's going on there. That's just another way to look at the chart. That's the risk. That's the liquidity. We've talked about the stock. We've talked about the quantum opportunity and how it's super speculative. But hey, if you only buy stocks with a bunch of revenue, earnings and sales, and you would have been buying NVIDIA over the past month, which went sideways. Meanwhile, people were just absolutely laughing all the way to the bank in RGTI, QBTS, IONQ, all the other quantum stocks. So, IONQ coming down, some of them coming down as well. So if you're looking for the next one, this is the idea. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to talk, head over to stockscommunity.com. You can sign up for, I think it's less than, maybe like $22.50 or whatever the discount is after you use code Q4. You get that 20% off. You can try it out for 7 days, and I'll see you over there.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
What's up, Big Beat on YouTube? All right. What else we got cooking over here?
If you're worried what's going to happen to your favorite tech stocks this coming week, you found the right video. We're going to run you through Palantir, SoFi, Nvidia, AMD, Intel, Tesla, United Health. We look at some of the bigger tech stocks as well, like Apple. We look at the NASDAQ and the S&P market overall. And when I look at the stocks that are making us money, and I'm just putting on the screen here the stocks that we've covered in recent YouTube videos, the reason we're making money on them, me and Winston, isn't because I know everything there is about the business. It isn't because I've fallen in love with the company, or it isn't because I contracted conviction. There are apparently meds for that nowadays, by the way, if you suffer from that. It's because it is much easier to make money on the stock potentially if Wall Street's great big pot of money is also buying that stock, right? Just easier. So all we actually do here is we follow the money. And the way to do that is to look at the stock chart. And I used to look at these squiggly stock charts and thought, this is a lot of nonsense, what a waste of time. And now it makes me money because I had a boss, you see, who taught me about squiggly lines. And when it's your boss, you don't question it, you just follow because otherwise you get kicked out. Whereas when you have the luxury of learning this from home, well, you can doubt things and you can say, no, it's all about fundamentals. Fundamentals are an important part. I'm not discounting that, by the way. But if you want to get, say, to know when to sell, then the only thing that really matters, in my humble opinion, is whether the money is leaving the building. And I will literally teach you that very rule, like literally when to sell, because I think it's the lowest hanging fruit for retail investors like you and me, is just selling better, selling at the right moment. And that doesn't mean, by the way, the very top of the market, because that's impossible, but at a better moment. Because most people have these beautiful gains and then they give them all back to some bugger on Wall Street, and we can avoid that. If you want to learn that, by the way, I will teach you that on Tuesday at 9 p.m. New York time. That is on Tuesday, 9 p.m. New York time. There's a link down below, felixspencer.com/training, and you can sign up for that completely free of charge, part of our mission to make 1 million people financially freer. So what do you see when you look at the Palantir stock chart? Well, I always see heartbeat patterns everywhere. And they look like that. They look like squiggly little lines. And essentially there is a top here at sort of 188 or thereabouts. There was one that was just a little bit, actually pretty much exactly the same level. So that's sort of the zone that we have, that resistance. Every time we go up there, we hit our head. But there is also good news. And the good news is that every time we drop, just put a line under each of the lows here. What do you see? Well, we always bounce back up, right? And that's quite a positive thing. So overall, yes, the stock is stuck essentially in this zone,
But that isn't really a problem. It just means, we come up a lot. There's a little bit of exhaustion, very little selling down here. Everyone's just kind of waiting. Doesn't mean I'm buying it here. For me personally, Palantir becomes a buy again above 190. And maybe that seems odd. Why the heck do I want to pay more for my stock? Well, it's very simple. Again, a question of probabilities. So today, there is a 50-50 chance it's going to go up or going to go down. And I don't really like those odds. So I would like to improve the 50 number here to something greater. And then that happens typically when you break out of these zones. And the reason for that is that everybody on Wall Street watches the same rules. It's sort of as simple as that. So Palantir to me looks good. Consolidation. I think it's very important to have a stop on this somewhere. And that depends on your setup. It might be somewhere here. It might even be a little bit lower. It might even be much, much lower. That depends on your exposure, your position size, and how heavily you are in sort of AI and everything else. Now, moving on to SoFi. SoFi actually has a pretty looking chart here. Let me tell you what. So if we just connect the highs and then we connect down here the lows, what do you see? Well, we're basically once again just consolidating in this tighter and tighter zone. And that's what happens when you sort of find direction. And it's pretty good. Why? Because there are small banks in the US that are failing and everyone's screaming about regional banks. And for some reason, SoFi gets lumped in with the whole regional banking crisis. And of course, it isn't a regional bank. It doesn't have a branch. It doesn't, provide loans to mom and pop shops and isn't massively over leveraged on commercial real estate and all that sort of disaster. So it's got nothing to do with it. And that potentially creates an opportunity. Now, I own some SoFi stock right now, not because I have conviction on it. Actually, I think it's a great business. I think it's run by a great CEO. But actually, my co-founder for Trade Vision here, he used to work for Anthony Noto. Just there was an interesting little tidbit of insight there. So what would I do with this? Well, what am I doing with this? Well, I obviously have a stop set up to make sure, I'm protected. And then if it breaks out again out of its recent highs here, or maybe even on the dip if you wanted to, then that could be a buy opportunity. Now, the smartest way to stay in touch with what's happening with SoFi is to add SoFi to your news watch list, download the Trade Vision app, and then you get news alerts live as it happens, when it happens. And the beauty of that is, and there's some really good stuff on here, like the Intel first half, the Oracle yesterday, Apple's Formula One deal, and so on. And I'm only getting news on the stocks that I care about, nothing else. No politics.
Okay. I'm not sure Apple is a good buy right now. An interesting idea right now. I think there are some interesting ideas. One of them is mind medicine. So yeah. Take a look at that. If ChatGPT can load, that seems to be the question of the day. If we just had more compute, all of this would be solved. I can see comments over on YouTube if you drop those. Otherwise, I will be continuing on here with a little breakdown here. MNMD. Yeah, gotta be careful with this, but definitely in play, and yeah, definitely could raise some money too. So the last time they raised money was in August at $7, August 7th. So if we look at that, August 7th for $7, this is what we're talking about. August 7th. Somewhere in here. All right. Jumping into a little breakdown. There is one stock that is about to skyrocket, in my opinion. It is a psychedelic stock. They are partnered now with NYU. They actually committed $5 million to establish this partnership to help train psychiatrist through New York University's program there, and they also recently raised money back in August at a price below their price at the time of that raise. So after that raise, the stock stayed the same price. So that ended up being bullish, and then bodes well for us in the future, knowing that the small, tiny pharmaceutical, well, technically it is a pharmaceutical company. They do psychedelic pharmaceuticals. If they need to raise money again, and the stock price didn't go down the last time they raised money, even though they raised it at a lower price, that's good for us to know. It gives us a little more peace of mind, which is important to have with these companies that only trade a couple million, $10 million a day or more. Definitely not 100 million. So let's jump into a little breakdown of the chart, breakdown of their partnerships with NYU and the like, and see how much risk you're willing to take for this startup. Not financial advice.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, so this is the chart. This is what we got going on, and this is the move up recently. They have shown explosive moves in the past. This is 30% in the matter of a week, handful of days. Of course, much stronger than the market. That overlay in the background showing the market. This blue line showing the relative strength of the market. It's much higher. Of course, we can just see that looking at the chart, but never hurts to have it shown on all lines. There's a lot going on down there. I've got to, maybe make that a little cleaner. It's not even clean for myself, but blue line shows that it's way up here. The MACD thing, I barely even use that. I'm trying to work on that, but really all you need is volume, which there is some volume that came in on this price increase, and there's definitely enough volume, about $20 million a day. Sometimes there's much less, 10 million or less, but it's liquid enough for most people. And then on a 5-year chart, if we look at 2022, no stocks did well, and MNMD was no exception, coming down from the COVID bubble as well. But there was, this is a stock that can have some euphoric moves. That's crazy, 200% in early 2024, and then sort of breaking out on a weekly above that level now. So that's certainly of interest. This is a pretty important level. This is just recent enough where these people probably did sell, and you can see tested here, tested here, tested here, tested here, breakout above here. So whether they sold or not, I'm sure they did at this point, but this is still a visual price level that's important to get over, because it's saying, hey, there's more demand than that. So, and now we're going to get over again after we've gone sideways. So, maybe you're a bit late to the party if you buy here. You actually are probably a bit late to the party, but if you do get a pullback to this level, this is a really, really awesome base to risk off of. Risk maybe 50 cents or more. Of course, if you're trading on a monthly chart, if you don't check your charts much, well, all you see is this breakout, and you're actually getting out at a perfect time. So all depends on how active you are, and let's take a look at what this company does so we can maybe be a little more reassured or not on how to buy a company that trades, $20 million a day or less. So this is the ticker MNMD, MindMed, psychedelic biotech, right? So these are its peers, and psilocybin is the active ingredient. I think I've heard of that. CMPS, and then ATAI, and then CYBN. So if we look at those ones, CMPS, marching up, kind of choppy. This is definitely worrisome. Probably some trial data or settlement news or something. We can dive into that if we need to. But yeah, it looks like there was some type of what is this? This actually sounds bullish. So, I don't know exactly what happened there. Because let me know in the comments. But this sounds good, right? Allowing psychedelic convictions to be pardoned. And I'm also not really sure what that has to do with, psychedelic drugs, the product itself. But anyway, ATAI, pretty clear uptrend as well. A little choppy. little wicky, but definitely a lot of volume here. Maybe if it pulls back, this is an opportunity, but it's definitely, moves 12% a day, up 30%, down, what is this, down 20% or whatever. This is a pretty nasty wick. So I do think that MNMD, it's a mouthful, is a little clearer. I mean, this wick was bad for all stocks when the market went down 10% or more in a day, 8%, actually less than that. But CYBN is not the one you want to buy. So it's got to be that one. And you don't want to hold the earnings, but earnings are full week plus away, Halloween, and very fitting for this company, I guess. If we look into a little more info about what we're talking about here, they're having an important phase 3 trial in the first half of this year. So I don't know how that went. I feel like that we should have some information about that. Phase 3 is super important. So it's probably what happened is they enrolled phase 3. Okay, this makes sense. Primary endpoint top line results in the first half of next year. All right, that checks out. They've demonstrated phase 2B. They did get clinical remission and a response in the majority of participants. I'm not particularly sure if, I'm not going to read into this exactly because maybe you could get less participants experiencing a response, but the response was, exceptional. Whatever. The point is they're marching towards phase 3. I'm not a biotech expert. You're not, probably. And yeah, this is important and a huge, massive market anxiety. If this thing helps you sleep, that's pretty much helps everyone. I don't know a single person that wouldn't want better sleep. And not everyone's going to be excited about these marijuana stocks, these psychedelic stocks. But the deal is, this is basically in the running for being the winner in this category that is definitely interesting. This is the partnership with NYU Langone. I don't know the name of this rich guy's, I don't know how to pronounce his last name, but they committed $5 million to NYU to establish the center. But you might be like skeptical, like, okay, so NYU didn't put up any money. It's like, well, I mean, they're a research institution. They have to first put their name behind it, which is a huge risk. And then they have to actually train all these people to actually, and then there's probably some research funding that they're able to get, federal grants as well, to make all this actually happen beyond the $5 million. So they have other partnerships as well that I'm just not as familiar with, but, it's not that these universities are not legitimate. They just don't have as big a brand name in the US, right? So this is the difference. They're self-funding. So that's a little bit compared to the ones we just looked at, CMPS and ATAI. The concern here is if they self-fund, right, the stock price could go down because they're expanding the number of shares, which they have this shelf available. They can raise money with that at any time. It's unlimited. And they have raised money. But like I said, they did back in August raise quite a bit of money, $75 million at a price lower than their price at that time. August 9th, they raised $75 million at $7. So if we look at August 9th, $7 is down here and the stock price was above that. And the stock just sort of chugged along. I mean, sure, it had like some pullbacks and chop, but shut up. It didn't get really affected by that capital raise, which is below their current stock price. So that's helpful to know for a little company that trades, dozen million a day dollars, because if they do raise money at a price below their current stock price, we've seen that, well, this company just kind of chugs along anyway. So it's not that big a deal, which is what we want to see from a startup. It's better for them to have more money, more cash. They kind of need cash right now, if they only have a couple years of cash. It'd be great to have some more runway. So yeah, they could offer. We saw that instrument, the S3, that they can, tap. And then here's the deal for the market itself. I wouldn't worry about these price targets. This is kind of whatever, unless it's like JP Morgan or Goldman Sachs and it's some big research thing comes out and then they get a big price upgrade from Goldman Sachs. Or if they get a ton of price upgrades at once, which is rare, that could make the stock shoot up. Happened with CrowdStrike recently. But in general, don't really need to worry about these. These are not like super brand name. I mean, I'm undereducated in this space, but so yeah, it is legitimate, but part of that legitimacy is them self-funding and then working with legitimate institutions like NYU to sort of push themselves forward. There is a bear case, of course, as well. Phase 3 has to happen. It has to, those top-line results next year have to come in successful, and then making the drug commercially viable is also a challenge. Maybe they'll get acquired, maybe they won't. Maybe those big companies will do some type of milestone payment agreement, and then those other companies. So here's the milestone payment. This is exactly what I was talking about. MindMed is not doing that yet. They might do some sort of milestone agreement with a big company, but I don't know if Pfizer, Merck, or Johnson & Johnson, or whoever is going to want to do psychedelic drug development. Again, I'm no pharma guy. So they got money, and the chart looks good, and they have a treatment, and they're trying to see if they can get those results in. So that's what's going on. That's the sort of price agreement that they're starting to expand out of. And on a 5-year chart, that level is very important, all the way going back to really 2022. So see if it can maybe pull back, hold, give an awesome entry. Or if it just goes without you, well, maybe you'll have to wait for another sideways move, but probably a possibility of at least a pullback here, considering the market's pretty choppy. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to learn about stocks, ask me anything, and get the best idea on a single day, on a particular day, rather than these YouTube videos come out a little late. They're like all over the place a little bit. YouTube hates when you put out like a handful of videos all at once, so I have to stagger them. And the community is where you want to be. That's where you can just ask me questions directly and get answers, and also get a weekly live stream Q&A where I go into my process. And you can see that recorded too. You don't have to be there for it if you're busy, which most people in this community, I expect, it's for busy people. It's not for day traders. All right. Hope that helps.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's take another look at this Felix info here. What do we got cooking here?
No noise, no gibber, no woke bollocks. And I don't have to read the paper. I don't have to read the FT or Bloomberg or watch CNBC, and it saves me a ton of time because all I care about are the news items that are going to move my stocks. Not all the news items on my stocks, because again, that's noise, but just the news items that actually move my stocks. And that's basically what you get if you craft yourself some Trade Vision, which is this platform and this app that we built, and there's a week's trial, so there's a link down there. FelixFranceBach/Trade Vision, so get your pause on that. Now here's NVIDIA, and you might be forgiven for thinking, well, that looks a bit like the SoFi chart, right? Yes, so we're a little bit, steam has gone a little bit out of the market. We're just kind of zigzagging sideways a little bit. Not a bad thing, it's just part of the full patterns of the market. But if you look at where we are right now, we're basically in July. So what does that mean? It means this entire time we've just done a little bit of a zigzag job here, but we essentially are going just purely sideways. Now we're at the top end of that sideways zone, which is quite a good thing for NVIDIA. I've put out a video yesterday on the whole AI circular funding malarkey. You might want to watch that. I do think these AI stocks are going to go higher. My personal opinion doesn't mean you should act on that. But eventually, stuff's going to hit the fan. And you want to make sure you're protected. You want to make sure you've got some automated selling setups so you lock in those gains. But no, this isn't terrible. There's nothing particularly wrong with it. We've managed to bounce off the 50-day moving average line here 4 days in a row, which is actually a very, very supportive thing because it just means the dip buyers are still very, very strong. So again, not the sweetest entry point. If you wanted to be really like gung-ho on it, yeah, you could say sort of above that zone here might be an entry point, 185 or something like that. I think the more prudent thing would be to wait for the previous highs up there. The closer would be at around about $190. But again, not advice, just my opinion. So you got to come to your own conclusions on that. But again, make sure you get the news on AI because someday this is all going to change and you're going to want to be one of the ones who knows about that. Right? Now, AMD here, tremendous breakup on that, the Oracle deal? I think it was the Oracle deal, wasn't it? And
Indeed. the OpenAI deal. So let's jump. The OpenAI deal is essentially an Oracle deal because they're getting some chips through Oracle, from Oracle, that are NVIDIA chips. Oracle servers, NVIDIA chips, OpenAI software. Pretty sure that's how it works. Yeah. So let's jump into a little breakdown here of Google, the behemoth, the one and only. Not Tesla, not Microsoft, not Meta. Definitely a lot of recent growth. Oh boy. All the opportunities are in trillions when you're talking about these companies. And there's news every hour, if not half hour. Data center in India for $1 billion on the 13th. So what happened? Well, that was pretty much just the market. Okay. ChatGPT is still, oh my god. A little bit of a correction there. And let's get this thing cranking here. Okay. GOOG is the company. You've heard of it. I've heard of it. We know what they do. They're probably not going to have an OpenAI agreement, although they might. I don't know. Pretty much anything is on the table now. Goog. Why Goog up? Why Goog go up? Help us, Meta. I should be asking Gemini. Okay. Come on, Gemini, earn your keep. ChatGPT is still keeping up. All right, let's get down to a little breakdown here. I can see comments on YouTube, so if you have comments, you can drop those. Wow, earnings came out already on Google? That ain't right. Earnings are on October 29th. What are you talking about? Also, I don't know how to talk to this thing. Gemini.google.com. My Google links. Surely you can. Oh boy. Yeah. All right. Revenue growth accelerated. All right, whatever. Just jump into a little breakdown. There's one stock that is about to skyrocket. It is a Mag 7 stock. We're talking Meta, Amazon, blank. The S stands for 7. I would name all the 7 right now, but I don't want to get embarrassed. Pretty sure Nvidia's in there. Pretty sure Microsoft's in there. Pretty sure Apple's in there. I don't know where I'm at here in terms of 5 out of 7. Google is the stock that is about to skyrocket. In my opinion, it's already holding relative strength compared to the rest of the market, while Nvidia sells off, while Amazon looks sketchy. Stock is kind of like drifting down. Palantir are doing the same, drifting down. Google's holding up. So is it that their backlog for revenue is growing? Google Cloud backlog actually grew in the second half of 2025. I'll look into exactly the press release about that. How is it that a company that has Gemini, that seems to be lagging to OpenAI's ChatGPT, that seems to having all of its links just crawled and then resurfaced in these other LLMs, still doing so well? It could be that the LLMs are still opening the links and those ads are still being served. I don't know. I can give a best answer, but I do know that the chart looks great and there's a low risk opportunity to get in. So let's take a look at that with the help from Gemini.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
So this is what Gemini is telling us. Revenue growth has accelerated in Q2. This is a cloud platform, so the backlog of orders is huge, and this is, of course, what ChatGPT, OpenAI's Sam Altman is saying, right? They just need more compute, more compute, more compute. Analyst sentiment is, of course, positive, highlighting Gemini models because I'm using Gemini. And this is the question, right? This was the fear, right? People are just going to talk to chatbots. Why would they want to go search a bunch of links in Google? I personally have just been using ChatGPT. Like when I open up Chrome, so, you know, I think Perplexity just raised a bunch of money to have a new browser, which would be a real problem for Google because the only Google, well, I use a lot of Google services, like Gmail and stuff, YouTube, of course, as well, but I don't use google.com much, right? I just use Chrome. And then when I ask, like, how do you pet a cat, right, it just goes to ChatGPT. So I have that as a Chrome extension, and then that crawls all these links that are from Google. Well, they're not actually from Google, they're from the open internet. It's just I'm as used to associating Google with all these links, right? But we're not going to be, you know, ridiculous here. The point is the stock moved up recently, and it moved up a lot. This year, it's up 60%, but this is a weekly chart, so everything went up a lot over that period, Nvidia being no exception. But Nvidia has been basing over the past couple months and then sort of didn't break out. And previously we were looking at Nvidia as kind of an indicator of the broader market because their $4 trillion market cap does compose 2% of the entire, you know, universe of SPY stocks, right? So it makes sense that that would affect the SPY when Nvidia goes down. And look, you know, SPY is holding even while Nvidia goes down. I think that's a lot in part to AMD, which is a big market cap going up, in addition to Google and others. And if we look at, you know, what are some of these big stocks holding the market up, we can say, yeah, Nvidia is $4 trillion, but just below them is Google. And look at Google's relative strength to Nvidia. It's pretty significant. So there is an opportunity to buy this sort of breakout level. Typically, I wouldn't want or think it's a good idea to buy after what is essentially 6 days up in a row. This was kind of this is still a good day, given that the market looked so ugly on that day. So this is the market on that day, right? Pretty bad. So Google showing significant relative strength. You can buy Google or Alphabet stock. I think it's like Class A, Class B. It doesn't really matter because they move essentially the same. If you were like a institution, you would need to account for getting the right class shares or whatever. Or if you were in the early, you know, venture, late stage growth investor or whatever, you want to cross all your E's, cross all your ties. You get what I'm saying? Just trying to say, we're not. We're just equities investors. This is common stock. You just buy one of these. It doesn't matter. They look pretty similar to me. I mean, correct me if I'm wrong. I think maybe GOOG is slightly less wicky. They both move 3% a day. I don't know. Almost the same price. So the point is, there's sort of a level here to buy off of as well at 252. And if we go back to a weekly chart of 5 years, you know, it's all blue skies. And of course, on a 20-year chart, we are in the stratosphere. So that is Google. You know, it's like the monster energy of tech, just an absolute behemoth. But importantly, to its peers right now, it's showing relative strength again. If we just look at Meta, it's not super strong right now. It's actually coming below this level. And then look at Apple, it did not break out because its breakout opportunity sort of coincided with the market. Trump, tariff, China, Xi, however you pronounce his name, sort of disagreement over the rare earth policies of having to approve those companies before they ship rare earths out of China. And Trump saying, it's all fine, but you know, the damage was done, so Apple is down. Tesla, after that big breakout and to sell the news on the robotaxi delivery numbers, is you know, suffering from the market, but actually is following the market at this point and probably unplayable until after those earnings come out. Maybe it establishes a high volume day. You can get in on a high volume day at the close or after the close the next day. Use that to close as a risk level. And then other big companies in this sort of category, Palantir, yeah, you could say it's sort of at a level you can buy, but when you zoom in, you see it's actually kind of looks, you know, like it's just barely holding on here. So this big day that was down was actually prior to the market going down. So this is totally separate. And then you have to deal with earnings as well for that one. So those are sort of, you know, the ones all in the same conversation. I mean, Intel sort of in that conversation, but with the government stake, it's a little disconnected. Robinhood pulling back as well after what's been an absolutely insane run. Maybe buyable through a year. Maybe it needs to go sideways. Maybe not enough time to buy before earnings in 2 weeks. Yeah, that's kind of interesting as a short-term week, 2 week opportunity. But just sort of laying all those out as sort of the groundwork as to why Google's relative strength is significant and outperforming its peers. So looks pretty good on this time frame. There's the level, risk a few bucks, make 10, 20, 30, and maybe get another breakout. So that's what we're looking like. Don't want to hold a lot into earnings, which is maybe late next week as the time of the recording of this video, mid next week. So that's something to be aware of, but you might get a 5-10% move prior to that, which is kind of what we're after here. 5% on a $200 stock is, you know, whatever it is, 20 bucks or something like that. So that is kind of the move. You get 10, 15 bucks out of that, sell some out, sell some as it goes down. If it does it all, you know, be in profit, and then earnings happens. That's the idea. Now, why Google, right? It seems a little silly asking Google why Google's going to go up. So probably going to limit the use of Gemini at this point. But ChatGPT is not cooperating at all right now. So in Claude, I've already hit my use limit. So I have paid for all these at once. In the past, I paid for, I think, ChatGPT and Claude, and then Meta. I don't know if you can pay for it, but there is some bull cases for Google. I think the main question everyone has on their mind is, of course, the ChatGPT issue. If people are used to clicking the blue links, are they going to keep going there? Is YouTube revenue going to make up for that? Is GCP revenue going to make up for the downfall of the blue links? Are we going to finally see that Google isn't, in fact, not a monopoly on search, but it's actually a suite of products, including, well, probably not including these Nest smart home devices, because I certainly don't think that's that big. But advertising on YouTube, advertising on display networks is also pretty big. You know, banner ads and on the sides of websites and all that is still huge. In-app advertising, they might have a piece of that as well. And then they've got big price targets, you know, respectable places, Guggenheim. And then now the question becomes, are they going to survive ChatGPT? there's always regulatory scrutiny in big companies. I don't think that's really that notable. Although antitrust is a problem. So they survived that. They must have really good lawyers. They do have very good lawyers. And then they've got these little sort of like tchotchke gimmick sort of things, kind of like ChatGPT putting out Sora, that of a company of this scale, it's not really a gimmick. It actually could, this is a big deal. Gemini getting to the top of the ranking. I don't know if it's still there. I don't think it is, but that's a big deal. Of course, you had to pay for Gemini. You had to pay for all this. I mean, you have to pay for Sora too. I think some people got some early invite links, but it's crazy to even be talking about image generators as a big driver of revenue. But the fact is, people really like photos. I mean, I remember I went to a Google, whatever it's called, I/O thing, and in like Cambridge, Boston or whatever, and they talking about photos for like most of it. It was like the number one thing people care about with Google. It's like, we got a new thing about the photos. We got a new image recognition. We've got blah, 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 blah. But here's the deal. The stock has outperformed its peers, and they're probably not going to win self-driving, but no one expected them to win self-driving anyway. That's sort of not going to be a problem. So yeah, they are also sort of well known to be probably doing the most research-wise related to biology and like large computational models using AI to help with drug discovery. So, that sort of stereotype of Google being like the most do good of the, do no evil, may actually have some footing. So we'll see what happens with earnings. Probably want to make sure that this breakup of the entire company doesn't happen before you invest for the long term. That seems like an evolving story. And then, yeah, this is good that advertising revenues grew by 11%. This is obviously trustworthy. This is audited and all that. So, and then this is real as well. Growth in Google Cloud. So that's huge. But yeah, I don't know how the number of tokens processed is an indicator of value. I guess it is. I guess that's how you indicate. It's like monthly average users times monthly average usage or something. Tokens is just words, right? So whatever the most words goes through. You would think Google would have more words than ChatGPT, but I don't know if they're counting people who just search in Google and then it shows this AI overview or not. This is a revenue increase. That's good. Look, I'm not a financial analyst. We looked at the chart. I'm not saying you're going to hold this for the next 5 years. So I kind of running out of things to say that are that constructive. So I'm going to shut up. Here's the chart. That's the level. It's outperforming its peers in the Mag 7. If you like these ideas, hit that like button. If you want to see more ideas when they come out, hit that subscribe. And if you want to take the next step, reach that next level in your investing, head over to stockscommunity.com. You do get 20% off when you use code Q4. You can try it out super low risk for 7 days for just a nominal, like $25 fee, just to get your feet wet, see what it's like, and then make a decision from there with a fee just to keep the bots out and to not just have a bunch of random people popping in and popping out. So hope that helps. We are live, and I will see you in the next video if you're seeing this recording. Good luck.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right, let's take a look at a little more Felix here. What do we got cooking here?
It's very, very positive for a stock when it breaks out. So there's a gap up here, right? You get a big, beautiful gap up, and you don't go back down into the gap. In fact, it's just continuously gone higher. It's formed a bit of a top up here around about 235, 240. So 240 is your new resistance, as the Frenchies say. But overall, this looks very good. And the last 2 red days we had here, we had very low volumes. Again, people are not really selling this. They expect this to grind higher. So if you're an AMD, congratulations. This looks pretty good. Next breakout will be, in my opinion, when we go 240 above. But again, just my humble opinion. Now, what about Intel? And I showed you this. Is that the news from yesterday was Intel rises as traders circulate talk of a large AI client for Intel's Foundry. And that came out there, obviously live as it came out, not as I'm showing it to you right now. But to me, those little news nuggets are like, okay, this is really, really useful. Very, very useful information. And I tell you what I like about a stock. And there's a little bit of wisdom in education in this. You see the stock sort of bounced up here, right? And then what did it do? It did this sideways action, which I call a heartbeat pattern. Then it broke out again here, retraced a little bit, which is quite normal. Second chance, we call it. You get a second breakout, retraced a bit. You get the third breakout, and now we're consolidating again. And that consolidation is a happy place to be. But it is one where you want to protect yourself. It is one where you want to set some sort of stop so that if it does drop significantly, then you're going to take profits, and maybe that's here, maybe that's there, maybe that's here. That depends a bit on your overall portfolio setup and how exposed you are to the sector and all that kind of good stuff, which we're going to talk about a lot on Tuesday. If you join me, training live.
You can ask questions
and
there.
What will be the entry point for
little breakdown here?
Financial advice. For me, I look at what's the recent highest close? So there's one here, right? That's one there. The red one's closed down there, so you can ignore those. There's some here.
I'm really pushing.
So it's kind of that zone there. So if I then look at, what's the dollar amount? I'd say $38 and above. So for me, Intel above $38 would be potentially a buy. Now, kind of crazy to think that I'm willing to pay more for a stock than it's worth right now. Well, if you think it's going to go up, why don't you buy it right now? I'll tell you what. Because right now, a stock in that setup has basically what all the studies show you. There is a 50% chance it's going to go higher. There's a 50% chance it's going to go lower. Do you like those odds? I don't. No, I really, really don't. Whereas once you break through the resistance, and every trader in Wall Street uses the same rules, once we break through the $38 here, we actually, this upside becomes a greater percentage. I'm not going to give you a precise number, but it's going to be a greater percentage, much, much less likely to collapse. And by the way, stocks in this kind of pattern, when they do collapse, they don't do sort of this sort of a thing. They tend to do that, right? Drops are usually much, much more rapid than upside. So ultimately, your success is going to be.
All right. Look at CORZ here. Cores. Okay, there's a lot going on here. What are we talking? Core weave is the major thing we want to do here. I want to look at the core weave acquisition. That was the agreement in July. They're going to vote on October 30th. So that thing is coming up. CoreWeave, of course, having that connection to Meta. Core Scientific having a connection to who? We're thinking. But what they do is they're an AI hyperscaler, data center operator. That seems pretty important. Data center operator. Cores Scientific. What is a data center operator? I don't know. AI hyperscale. Everything is a buzzword here. Oh boy. Data center operator. Let me just get a description of the company instead of a financial breakdown here. Oh boy. They supply high performance computing infrastructure. CoreWeave rents NVIDIA GPUs. Core Scientific. Yeah, what do they do compared to CoreWeave? Do they build the GPUs? Do they build the servers? Do they connect them? What do they do? Like if they operate them, are they a services company? Are they a consulting company? I mean, they're still kind of curious, right? If we look at the chart, yeah. Yeah, this is cool. This is cool. I think this SQM is interesting. Maybe that Dell becomes interesting. I don't know. CORZ under the spotlight for sure. And we're still working on that. We don't know what they do, guys, after all this. It would be great to know what they do, but we can't have it all. Maybe Gemini can say it, tell us. What? This ChatGPT is just amazing. Let's see. Data center infrastructure provider versus a hyperscaler. Okay, so all right. Let's jump into a little breakdown. I guess it's connected to let's see. I guess I could have asked an LLM that's a little... Oh, Marty's got the answer. CoreWeave provides the equipment that holds the hardware. CoreWeave provides the... If you go on their site, it's like on the main page. You have... Yeah, that probably would have been a good idea just to go to their site. So they provide the equipment that holds the hardware. And then cores must provide the not the equipment, but the building. I don't know. The wires. God, this ChatGPT is just horrible today. And yesterday. And last week. And the week before. Can you even copy it? No, can't even copy it. Let's see. Okay, it's all through the CoreWeave partnership. Anywho, let's jump into a little breakdown. I guess Core, Marty says, they do the things that hold the computers, like giant towers. Yeah. I guess those are difficult to build. I have no idea. But just try to nail down how they're connected to CoreWeave and then go from there. So, thank you, Marty. Jump into a little breakdown here. There's one stock that is about to jump up in price. It is a soon-to-be acquired, as long as this vote goes through at the end of the month, stock by CoreWeave, which serves Microsoft, Meta. CoreWeave recently had a $14 billion deal with Meta. And also OpenAI. CoreWeave serves ChatGPT and its master Sam Altman. So let's jump into this ticker. This is CORZ, Cores Scientific. They build the towers that hold the servers, the GPUs, you know, the NVIDIA GPUs. So they basically build the infrastructure that holds the CoreWeave infrastructure, which serves, you know, using components from NVIDIA and other similar companies, Meta, and all these software AI companies. So let's jump into the chart and why this company, CORZ, is a good idea to look at right now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
Alright guys, so I get a little mixed up sometimes, like all of us, but here's the chart, and I'm pretty sure, if I'm not mistaken, this company, Cores, is a former Bitcoin miner turned hyperscaler, like so many before it. Mara is one, Riot is one, and CoreWeave is the company that's, this pop was on the $14 billion deal with Microsoft. This is like the last company that hasn't had a crazy run in the past few months. And it's just sort of like, I don't know if it's getting sold into or just what's going on, but it hasn't popped yet. So this is the company that is to be acquired by CoreWeave. This was sort of, you know, there was rumors that it was going to happen, and then there was like a non-binding agreement, and then on that news of the agreement or the proposed vote, it was sold. So sold out the news. And then coming up at the end of this month is the October 30th is the end of this month, and that is the date of the vote. So that is basically the time to see whether or not this acquisition will actually come through. If it doesn't go through, I expect this to sell off, although of course could be wrong. But let's jump into a little bit about that deal and then about what Core Scientific does. So as far as price levels, you want to be careful about earnings coming up in about 3 weeks. So that's what I would look at. Other than that, there's sort of a clear level that it's over right now, starting in June and then December of last year. It is over that. It's sort of basing above that level right now. So maybe you can risk a you know, it's kind of at a good level right now. You don't really want to risk all the way down to 18, 17.90. But we'll see what happens on Monday or when you see this video. It just showing incredible relative strength to the market, which, you know, there's a lot of buying in here even as the market went down. So yeah, that's pretty much what's going on. They're basically helping install the equipment, and obviously being a Bitcoin miner, they're very well versed in hyperscaler, building out cloud computing capacity and providing the infrastructure to, you know, run all these massive machine learning algorithms for the big boys, the Mag 7. So let's jump into this deal. CoreWeave announced intention to acquire Core Scientific $9 billion deal at $20 a share in July. Okay, so that's back here. $20 a share is up here, and then that news was sold off of. Okay, so the important, you know, intention is the operative word, and then there was an opposition, and this holder expressed disapproval. So now there's going to be a vote, you know, including this holder who owes 6%. And the board has to basically vote on it. The board has determined that it's the best deal, but there still has to be a vote. So I'm not exactly sure how many votes each shareholder gets. I assume it's, you know, maybe it's based on the amount that they hold. I don't know. Maybe I should look into it, but it's probably not, you know, as relevant as just looking at the chart and saying this thing definitely has relative strength. People are buying this into the 30th. So do you want to hold it through the 30th? That is a good thing to be aware of. You probably don't. So the 30th would be next Thursday as the time of recording this video. So that you want to be aware of. You know, if you can get in on this run up, just like there was a run up into the Sell the News event, which was the intent to acquire, then maybe you can get a few bucks out of this, risking, you know, 25 cents or something, which is actually a big deal. That's like a very high risk reward opportunity, and there's a ton of volume for most anyone who wants to get positioned in this. And if you look in the intradaily, you can see, yeah, it's a little whipsawy, but there also does appear to be some normal technical analysis holding, meaning came down to this level, held, and is holding up. So that is the ticker, that's the chart, and then a little more about that deal. Why is this such a big deal? Well, CoreWeave is backed by NVIDIA. Literally, NVIDIA is an investor of CoreWeave. It's a recent IPO. They did get that contract with Meta, and they also got a $6 billion order from NVIDIA, who invested in them. So that's a little circular, but NVIDIA is actually recording revenue, so this isn't, you know, a total Ponzi scheme. Now, here's what would help. Basically, CoreWeave could fulfill its contract because Core Scientific already knows how to mine a bunch of Bitcoin, so they develop data centers, and CoreWeave works on the construction site management. Basically, CoreWeave is like a giant holding company that raised a bunch of money to go make OpenAI's dreams come true. At least that's as close as I can understand what the heck is going on with this company. They have a bunch of debt too, but they did get that big agreement with Meta, so that's making that debt not seem like as much an issue. And then NVIDIA, $100 million investment a couple of years ago, was a nice little Kickstarter. Of course, they're, you know, kissing the ring or whatever with the order. And then, yeah, they do. I mean, NVIDIA is really the only one that they can buy these GPUs from anyway. So NVIDIA is the one and only. Now, they did enter into this agreement with OpenAI as well, $12 billion. I don't think that's like an up to agreement. I think that's actually the number. Of course, OpenAI could go defunct, but probably not in the next 5 years, right? And then Microsoft is also served by CoreWeave. So all the big companies pretty much have some connection to NVIDIA, of course, and then as a result, some of them have a connection to CoreWeave, which actually fulfills that capacity for them. They don't just buy NVIDIA GPUs and then just set them up in their office, right? They use the data center provider. So yeah, if you're talking about Core Scientific, you're basically talking about CoreWeave at this point, although the acquisition still has to go through. So we talked about that vote. We talked about sort of the difference between CoreWeave and Core Scientific. And Core Scientific is legitimate. I don't know that any of these are particular data center investors, but yeah, we know they're a big deal, and they are. I don't know if they could be profitable just mining Bitcoin. Most of these companies are getting higher margin, being AI data center companies that are Bitcoin mining companies at this point. But apparently, this acquisition, as the board stated, is good for all current shareholders. So that's pretty much the description of what's going on here. This is going to be what's interesting. We never really know what's going to happen in negotiations. If that vote does not go through and that offer actually is final, it'll be tough to say what's going to happen to the share price. So yeah, that's why I don't think holding through October 30th is a good idea. I mean, you're going to want to look at, you can look at this or you can not. It can get complicated quickly, but in general, it's all going to work out. Like, you're not going to lose money if they get acquired. That's not financial advice, but I'm pretty sure that's going to be a good thing, accretive for shareholders. I could be wrong. Like, this value could be wrong. This is an implied value. Maybe it's less than $20 a share. You can see the price right now is pretty close. So people seem to think that that's going to be the acquisition price, and maybe it'll be a premium over the price. It's definitely a premium before the talks began, but maybe it'll be a premium even to that $20 to what the price is at the time of the successful vote. But we're gonna see what happens. Okay, is what it is. So yeah, that's a lot of power infrastructure. And as far as the price of the acquisition, I mean, that's the stock price, but I don't actually know. I guess it was $9 billion. Just to give sort of scale, like CoreWeave gets $14 billion from Meta in that deal. They initially got $100 million from NVIDIA. They're far beyond that now, and then they're using that $14 billion, some of it to pay off debt probably, and some of it to buy cores to be able to fulfill in this contract for OpenAI, where they're getting $12 billion over the next 5 years. It kind of all makes sense, although you definitely have to do a little mental gymnastics to make sure somebody has the money, and it seems like, well, NVIDIA is good for it, so this is all going to turn out just dandy. As far as retail traders, all we really have to say is, hey, do you want to buy it here and make a handful of bucks and risk $1, and maybe the acquisition's higher than $20, and not hold before the vote goes through. That's kind of the bet that you can make right now. So low risk, potentially high reward, depending on how that vote goes through and how the acquisition price goes through. It's probably, given that it's so strong right now, it's probably not going to sell off significantly prior to the vote. That's all I say. That's why I caught my eye. If you like this idea and ideas like it, hit that like button. If you want to see more, hit that subscribe. And if you are looking to get one-on-one help for a limited time, you can get that in stockscommunity.com. We are going to start making that a more of a scale-up operation. But right now, the benefit to you is you can join a Q&A call and you can just ask me questions. I mean, you can do that on these lives too, but sometimes I'm distracted. Sometimes I'm making, doing a little breakdown like this. So I'll see you in the next one. Maybe I'll see you in the community. Use that code Q4 for 25% 20% off the $25 7-day trial, and I'll see you there.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.
All right. That is CORZ.